Good morning, everyone. Hello, everyone. Welcome. I hope you're all doing fine. I hope you're all doing good. Good morning, good afternoon, good evening, wherever you are. Good morning, Fab. It's Tuesday today. How's everyone? Enjoying your music? Yep. It is a moment for everyone to join. I give some time. Good morning, everyone. Right, okay. Let's have a look what's going on with Bitcoin. Let's have a look. Right, last week we said about Bitcoin that, for us to be, let's say, still on the bullish side, we need Bitcoin to move, right? We need movement, and this is the time. It has to do it now, okay? So we thought that it would keep on fighting the 50% of the level of the range that I marked out the red level. So that was the areas that it was keep on fighting to go through. Now I do post a few things on Discord, on the web room, and I was explaining my thesis with the members in the web room. This is an area to watch out, be careful, and it was always having a difficult time to go through. But this time, the positive thing it was that all the lows are getting higher and higher, right? So you had the ascending triangle taking in place. All the lows were getting higher and higher and higher. So that was an area that we need to pay a little bit of attention. And I said, also I did say that, even if it breaks through, we need to make sure that it stays above. Okay. So now this is what it is doing now. It broke the 50%. It broke the red level, which is a difficult one. And then it went straight into the old range that I have. This is a range. If I zoom out a little bit, you can see that this is my range. I'll bring that a bit closer to you. Here we are, range. I'll look at it again. So it got inside the range again, once again. A lot of people got excited. I understand why. That is a big push. That push, if you measure just a little bit the last low before the break, all the way up to the highest point, that was a push of 8%. It's not a bad one, right? You can't say that it's a small one. Does it? Who's got a problem with the audio? Let me know. Is everyone okay? I had the same complaint from one user the previous week as well. The rest of them were okay. Anyway, if he carries on, let me know. If he still, giving you issues there. Let me check my speed. Speaking of which, let me do a small test here. Let me check the internet here. So look at that one. Yeah, sure. Yeah, I think, okay, I mean, VPN is still on. Maybe sometimes the VPN may slow down things, but no, speed is looking good. Let's have a look at the upload. Yeah. I get half of my speed, but that is because of the VPN. But, you know, I'm still good. I'm still good. Right, okay, cool. I'll carry on. Right, okay. So, this is what we have to be careful with. Now we need to make sure that we stay above, if that makes sense, right? We need to make sure that it stays above. Right? And not only that we need to make sure that it stays above, right? It broke through in the range, and now, you know, this is the moment that it needs to retest itself. Either it's going to stay inside the range, which is going to be a good sign, or at least it's going to come back to retest that 50%, but this time as a support, not as a resistance, that we had these previous signs. So two things can happen now as we speak. Retest of the range, that we stay inside the range and then we carry on to hit the next 50%. This is the 50% of the range. Or either it's going to come back to retest the red line to flip from resistance to a support. Okay, this is the two things that we like to see from Bitcoin. We would like to stay above the 50%. Okay, otherwise it's going to be one of those things again, right? I'm not trying to be bearish here, but it's going to be one of those things that we're going to have again a lower high. Okay, that was a high, lower high, lower high, lower high, and is that going to be our new low high? Right, is that a question? I don't know. Okay, no one has the answer. No one has the crystal ball. What's today? Today it's the 27th. We've got another 3-4 days before we close the month. So let me go to the 2-month time frame. I know it's a huge time frame. 2 months. Let's have a look on stochastic RSI. And here we are, stochastic RSI. You can see that it turned around. Let me give you, can I have a replay? Let me see if I can have a replay a couple days ago. Can I do that? Can I change for a couple days but in different time frames though? Let me try this, if I can do that, if I can manage to do that. If I bring to this, and go back to 2 months. Nope. I need to go further back. No, it doesn't keep. If I... Let me try that. And let me go down to 2 months. Will it switch? Okay, it was switching. Okay, that's good. So let me see if I can play this. A fast speed. It was coming up. It was coming up. So this is a 2 month stochastic RSI. You see in real time, real life, how it moves. Okay. Let me pause there. That's what we had. No, I think it was a bit higher. Let me change that. Let it run for a while. Yeah, it was. Okay, so the moment of the question was if I'm gonna get a 2 month cross down. Okay, so let me check if that is finished. I think the replay is finished. Okay. So the moment that I want to all of you to see is we're heading for a cross down. Okay. But it wasn't over yet. Let me see if I give me 1 second, guys. 1 second. Yeah, back to the chart. Sorry about that. So yeah, the event that we want to pay attention, it was a cross down, okay, and we got, if you go to the price action, if you go to the countdown, we still have 4 days until we close the 2-month period, right, to be finalized. So let me close the other indicators here. Here we are. So this is the price section, and that was the problem, the area of problem for me. I said, okay, I don't want to see yet a cross down on the 2 month, okay, and we need to see if it's gonna go straight, okay. Before, a couple minutes ago, when I opened the chart, it was flat. This is what I marked out for you, that it was flat. And that it means that the push that happened a couple days ago, right? The big push that took place a couple days ago. Okay, let me have a look here, because we're changing. So that push that happened on the price action, it pushed on a 2 month on the stochastic RSI as flat. Okay. Here it is, now it's flat. A couple of days ago, that was like this, right? And it was heading towards a cross down. And if you watch my videos on YouTube, where I store all the videos, for all of you, you can go back and have a look on my last video and the video before that as well. If you go all the way down to the bottom, you're going to see the educational sessions here. If you go to the last one, or the 2 last ones, let me click on that one. Let's have a look. We're talking about the 2 months. No, you don't need to hear me. Blah, 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 blah. Let's go back. Let me find the stochastic RSI. You see, that was the area that was paying attention, the area that we need to break through the red line. Let me see if I have a stochastic RSI. I'm sure I have a stochastic RSI. There's no way that I do not give you the stochastic RSI as well. So let me go a bit fast forward. Let me find the moment that I discussed about the 2 month stochastic RSI, and we can see how the RSI was. Okay, it was towards a cross down. Let's have a look. And I said that we need a miracle. If if someone remembers that, I did say that Bitcoin needs to move, and we need a miracle to break out from the stochastic RSI cross down. So let me go down. Let me go down very quickly. And that's the one. So it was heading, you see, it's not a straight line. It was looking downwards, and it was heading for a cross down. So that was on the last week, okay? That was the area that we need to pay attention and to be careful, that we need to see a change. And from downwards the stochastic RSI looking downwards, it moved to a flat line. So we have that push that happened a couple of days ago. It managed to push the RSI to a flat line upwards. Okay, so that is a good sign, but it's not over yet. Okay, because the slow line can catch up and come closer, right? So the slow line can go a bit higher like this, and we may see coming closer to like this. So we are still closing the gap, and we're still thinking about the cross down. But to see the fast line increasing, right, is a good sign, but it's not over yet. Okay. Now the fast line 99.45, it cannot go really that high, right? It can always, the maximum it can go is 100. It cannot go 101. So that's the maximum. Now if the slow line, which is 19.3, and catch up and goes again to 100, and both of them go to 100 constantly, both of them, that's still bullish sign, right? We had that before. Okay, and we can have the RSI to be extended, stuck on 100, both of them. That is still good news, right? So now we have two good events. We got the first one, let's say, correct itself to the upside, and the second good sign is if we're gonna see both of them stuck on 100. If that happens, the price action will continue to go higher, and this is what we want, right? I did say that I did not feel this is the end of the bull market. Okay, it's a bit too soon. We got some time ahead of us. Not a lot of time, but it's too early. It's premature to finish the bull market cycle now. Okay, we need. And we can easily talk about another 12 months, right? And this is the maximum, let's say 12 months. Average, I say we have another 6 months at least, okay? So I hope, okay, on a 2-month time frame, okay, that's the stochastic RSI to be stuck up there to 100 as it did before, okay? If that happens, that's going to be very bullish. Now, let's go down one time frame, monthly. What I would like to see, I would like to see the first one to correct as well. Okay, I would like to see the first one to correct. And we did say that on the previous session as well, on the monthly, because once I check the 2 month, I do check the monthly as well. I did say that we need to see a correction on the monthly as well, and it's going to push and have a new cross up. And that will, kind of reset all these candles will reset, and then we'll have a breakthrough. Okay, we are in a state of compression on a monthly. Okay, you can see it as well on the price action. Okay, this is what you have. Okay, just take note the bodies, right? All the bodies are above this white line, right? All the bodies. That's the opening, that's the closing, that's the opening, that's the closing, that's the opening, that's the closing. All the bodies are above this white line. And you can see that we are compressing. Okay? So it's compressing. Now we're waiting for the big explosion. And hopefully the explosion will be upwards. Okay? Now if it wants to come down and touch base, it's fine. That 50%, remember, we need to stay above that 50%. On the bigger, that's 61.7 or 61.8 if you wish. Okay, I would like to stay above this level. I have also the pivot level, which is the pink line. The pink line, what it means is my pivot level between the previous cycle high. Okay, that was the all-time high back then. Okay, and this is the opening and closing that I had on the previous cycle, the top, the highest. Okay, and now you can see that that was resistance, and now we're trying to test this as a support, which is good. This is what we want, right? We want to flip it. Okay, we don't want to lose it. It took some liquidity from the market, We spoke about that on the previous session as well. So be my guest and feel free to go to the previous sessions and have a look. I don't want to repeat everything today. So that was resistance. Now that is going to be a support. That is a good sign so far. Okay, as long that it stays above that pink line or the red line as well, that we're really matching, very close to each other. Okay, 61.8 is my 50% of the range, and the pink one is 61,453. You see, so they're not too far away from each other. Okay, 61,500, 61,800. So it's only $300 apart. Okay, so we need to see, right, on the weekly, on the monthly as well, a cross up. Now let's break it down to a one time frame lower, which is the weekly. Okay, every time that we have a cross up on the weekly, right, you're gonna have a positive move on Bitcoin. So that was a cross up, push to the up, another cross up, another push to the up, another cross up now, another push to the up. Okay, now we would like to see also what do we see on the weekly stochastic RSI. We see these highs are getting higher, these lows are getting higher. Okay, so I have a high and I have a high low. Okay, so I would like to continue to have the same thing on the weekly to carry on, keep going. Okay, if the price action wants to play around this area, it's fine, and then turn around. Okay, this is what I would like to see. I would like to see the weekly to push higher. Okay, now before I go further, is everyone okay in the school? Are the lessons are good? Do you find the lessons easy to understand? Do you have any questions about the indicators or about the terms? About do you have a difficult dealing with, let's say, with emotions? Do you want to talk about it? Would you like to talk about any trade that you took or you didn't took? Why you didn't took any trades? Or if you took any trades, how did these go for you?
Hi.
Hi.
Can I start?
Of course you can. Be my guest, please.
Right. Okay, so I finished both the whale school and the sniper school. I just recently joined the sniper clubs just to see how it is.
Cool.
So I do. It's a quite a long questions that I have here. So
that's fine.
Okay. So when I'm watching almost everyone on Crypto Banter's YouTube for trade setup and things like that. And yesterday I actually got one trade setup for FUN fund because the EC algo indicators was compressing, and I entered it at an intended entry price. However, before because BTC went down, I'm on Asia time. So last night, early in the morning, I closed the trade because I'm going to get stop out anyway.
Okay.
So, and this is actually where I'm actually having difficulties with. I often confuse when we get the alarm to enter the trade according to those charts, all this alarm that we actually set up on TradingView.
Yep.
Should we only enter the long? When I call it leverage, I only do it on 1x anyway, just to put it on futures trade instead of spot because it's easier to track.
It's easier, and also you have the stop loss tools as well that you don't have.
Yes, okay. And I'm practicing right now. Should we only enter the trade if BTC is green? And if it's green, what time frame candle? What time frame should we look at? Daily, 4 hourly, 1 hour. And if I'm in Asia, what determined the closing candle? Is it the US New York Times? So the basic question is, when we actually saw the alarm for our entry, do I need to sit for at least an hour?
Okay. What time did
To
you?
see?
What time did you set the alarm? What time did you enter for long?
I entered
You did say that was Asian.
yesterday. Let's see. I think around 8 or 9 New York time, East Coast time. That's like 9 p.m. my time.
Okay.
And I closed it like 7 hours later. So I'm often confused if I only have to open the long trade if everything is green on the daily candle, because if it's on the hourly candle, sometimes it's red, sometimes it's green.
Okay, I got you. Okay. Let me help you here a little bit. I know that you watch everyone and you pay attention to everybody, and that is good, and also bad as well. I'm trying to be honest here with you. If you're watching Sheldon, and then you're watching Dylan, and then you watch Ran, and then you watch Fefe, and then you watch me, and then you watch Kyle, and then you watch,
Yes.
if I put all the names down, you're gonna get confused, right? Because every single person has different eyes. Okay, I got blue eyes, you have brown eyes, they have green eyes. They see the charts a little bit differently, not because of the eye color. I'm just being funny here. But what I'm trying to say is that everyone has a different view, right? They see the charts differently, okay? And no one is going to be pitch perfect, and no one is trying to predict the market. At least I am not. Okay. And, you know, when I hear someone that is trying to predict the market, I'm like, okay, stop it. You know, you need to stop here. Why? Because this is not a game of prediction. Okay. This is a game of possibilities, right? And you're trying to increase your possibilities and probabilities. Okay. So there is no need on your trading journey. You don't need to predict. I'm going to be very strong about this one. You do not need to predict where the market's going to go. What I want you, all of you, on my kind of thesis is I want you to be prepared on either direction. So if it's going to go up, I'm going to do this. If it's going to go sideways, I'm doing nothing. And if it's going to go down, I'm going to do the other. Right? I want you to have an approach, for all of them, for all the events. Right? That was action 1. That was action 2, like nothing. And this is action 3. For you to decide to do nothing, it's an action. Right? It doesn't matter if the outcome is nothing. It's an action. Right? You took an action. Let's say you took a decision not to take action. That is an action. Okay. So don't mistake in that. Okay. So, and also what I would like to make, what is my purpose here is I want to make everyone to be independent and unbiased. I don't want you to be biased towards Sheldon. I don't want you to be biased towards Bruce or Dylan. Okay. All of these guys are very, very experienced guys. I love every single one of them. Okay, this is not bad talking on them. What I'm trying to say is that everyone has a different reasons why he marked a level and why he decided to go long. Right now, I want to make sure that you stay unbiased. That's the one thing, and the second thing that is very difficult for all the traders is timing. When I decide, because when I was a very young trader a couple of years ago, because where you are now, I was there, right? I was there. I was making the same mistakes that you made. And the thing that I couldn't understand easily, it was timing. Okay, when Dylan says I'm going long, and he decides to go long, and you see it an hour later, okay, and or you see the day after because of a post in Discord on you see yesterday's YouTube, right? When people decide to come up and make a video, a positive video about a trade, they probably saw it before you, okay? So by the time you see it, let's say that they entered here and you're trying to get in here, okay? You have a gap, right? That is a timing gap. So they're gonna be in profit very sooner. And when you're trying to get in here and you go up by 5% and you're happy, these people are up by 30%, so to say. That give you a different numbers as a comparison. So you got 30%, these guys are making profit. You're making 5 and then it dives, right? And then you're on 0, you're panicking. And these guys, they go down to 25. Right, and they're going to decide, oh, okay, you know what, he's retracing, he's doing a bullback. I'm going to book my profits. Boom, they're happy. They come up on Discord and say, hey guys, we booking our profits. Well done, congratulations to everybody. And you're like, come on, I got nothing. I got 0. I got stopped out or whatever. Okay, that is because of timing. Right, and that is the most difficult one thing because a lot of people do not understand, and they're getting upset, right? And they turn around and say, "Oh yeah, you saying that you made profits and we don't make profits. This is a scam," or any kind of issues out there. So just to make sure that you don't fall for the same trap as an illusion trap is because of the timing. So how do you battle this? How do you battle not to be so much biased by other people and not also be late on your timing? You need to mark your chart your way, okay? You need to find, let's say that the price action is going to give you any random movement, right? And it's going to go up and then it's going to come back. You need to see your own levels, like I say. Oh, I see these as support. Oh, I see these as a resistance, right? This is, something that you need to do on your own view. And you say, okay, this is my support. That was a resistance. It broke through. It did not hold it. We fall under. Now we're breaking above and now we retest the support twice. This is a good area for me to go long. You have to do that on your own chart, on your own view, without being biased by Ran, Fefe, Dylan, Bruce, myself, Carl, Josh, Farouk. I'll give you all the big names out there. All right, even myself. I don't consider myself as a celebrity, but let's say that because I'm a mentor, I'll put myself as well there in the gang. So you need to break down the price action in a way that you understand and in a way that you can control, because you need to make sure you understand this as well. Another quote here: you do not control the market, right? You do not control what the price action is going to do. That's why I'm saying stop trying to predict, because this is nothing you can control. You cannot control the price action. But what can you control? You can control yourself, right? You can control your emotion status. You can control your strategy, and you can control your entry and exit, right? So for you to be in control, I want to make sure that you focus on the things you can control. You can control your entry and your exit. So you need to break down your chart into a way that for you can understand what's going on. Okay, so if I bring another chart up here, let me bring another chart, a clean chart. Let's bring, if you wish, Bitcoin again, but on a different exchange. So let me get IO, BTC. Here we are. That will be a nice clean chart. I have nothing on it. Okay, and just to make sure that I have nothing, I'm going to press the dustbin here, remove all the drawings, nothing. Excuse me, I'm losing my voice here. So you can go to the daily and have a look. Each candle now is worth of 24 hours of data. Okay, and you look at this and say, okay, this is my daily. How do I approach this? What do I do with this? Okay. Now your message coming through, Sam. There are 125 pips. Yeah, I'll explain this. So, you're welcome. So what we're going to do now, you see this kind of chart, any kind of chart, and say, okay, how I'm going to, approach this. Now, if you are, some people, they can see that very easily and say, hey, do I see this a range? And I'm going to mark a range. Is this a range? Like going up and down in the same areas? Can I mark this as a range? Of course you can. If you see this as a range, automatically you're going to mark it. And I put a rectangle like this and say, hey, look at that. Majority of the highs are here. Look at this. High, 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 high. No problem. Majority of the lows are down here. Can you see that? Yes, I like that. I trust that. Not a problem. You can do this as a range. Out of nowhere. Right? Other people may not see this. Right? They may not see this. It's not easy for you to spot out ranges. Why? Because they get confused about this direction. Right? They get this direction and they don't see the range. They see lines. Again, it's not bad. Okay? Don't blame yourself if you don't see the range. It's fine. Okay? They see lines. It's, as I said before, everyone has a different view, different eye colors. They see the world differently, right? You may not see the range, but you may see the lines. And somebody else will say, hey, hold on a minute. Isn't that a parallel channel? Like it's going like this. Here we are. Sort of a parallel channel, right? Or an ascending triangle, a megaphone pattern, right? People see this. Other people will see horizontals. Okay. Other people will see horizontals. So they're going to see like this. They're going to zoom out a little bit, squash a little bit down and say, hey, I see this. I see this. I see this. Right. And I may see something like this. This. Right. That is another approach as well. Now, who is wrong and who is right? Right? Who you going to believe? Who you going to trust? There's nothing to do with wrong and right here. Okay? Why? Because you're breaking down a chart by the way you see things. Right? So if you mark these levels and you're happy about these levels, good. Keep them. Right? Keep them because you need to make your chart your own. You need to own your own chart, if that makes sense. You need to believe what you see for you to mark out the levels, for you to pay attention into specific areas. And then upon these levels that you're going to mark out, then you're going to make your own decisions. So if my chart is different to yours, then I have different view, and then I will have a different approach, and then I will have a different decisions. I may go long, and somebody else will go short, and then you're like, oh shit, what am I gonna do? The one guy is going long, and the other guy is going short. Who do I believe? Who I trust? So that's why I say you need to be unbiased. You don't need to follow nobody. Okay. Now, I'm going to give you the tools to make sure that you mark things correctly. The easiest way, the practical way, and I hope that it's going to make some sense. So this is one easy approach is you need to break an area, okay, into 4 sections. We're going to start with 4 sections, which is easy, and then we're going to advance it into more sections. One super easy way to do it is you can go to monthly, right? Or any time frame, but I'll give you the example of the monthly. This is the current month. That's the current month. That is August. Okay. And that is the previous month, which is July. Okay. So this is the current month. I like to have a range, a monthly range. Why monthly? Because I am on a monthly time frame. So I would like to mark a monthly range, but not the current one, the previous one, any previous range that covers my current price action. What do I mean by this? The current price action right now, I'm going to mark it with a horizontal array. So here's a current price. No, that's not a horizontal array. Give me an array, please. Thank you. So here's my current price. Let me make it that nice and bright. Please. Can I have it, please, a yellow? Solid line, please. Here we are for my little friends here. If I want to see, I can make it white. Here we are. So here's the current price. So I need any candle, any previous candle, a monthly candle for this example that will have some data above my current price and below my current price. Okay, I need some information above and some information below. Right. This is my approach for the newbies, so to say. Okay, so I have this candle that the high is here, so it covers all this data, and my low is down here that covers all this data. Okay, so can I mark this area? Yes, you can. So what I'm going to do, I'm going to bring my Fibonacci tool, and I'm going to mark the top and the low, and I'm going to break it into 4 levels, right? Let me expand that to the right, coordinates. Let me bring that to the right to 100. And let's take this to the left to 50. Right. So now we expanded the lines. That's all I did without moving. Instead of doing it with the mouse, I did it with the keyboard, right? So I changed the values on the right side of the fields. It moves in horizontal way. This is vertical, this is horizontal. So I move these lines. So what I've done, I can bring that a bit closer, 90. Here we are, a bit closer, 90. So I mark, right, data above and data below, right? And now I can lock that. I'm gonna make it lock, and then you can go back to any time frame and have a look if these 4, zones, it's 5 lines, but it's 4 zones. Zone 1, zone 2, zone 3, zone 4. And you want to make sure that these 4 zones, if they make any sense, right, to your chart, and you mark these levels, right, based on the previous month. We are in August, but you mark the areas based off the range of July, the July high and July low. So technically, you are on the monthly range, okay? And this is the high, and that was the low of the July, okay? And this is August. Now, do you see anything that is going to be valuable to you? At least you mark levels, right? This is the very base, right? And this is the very top. Now, if people are going to ask me, what are the settings? I'll give you the settings right now immediately. So it's equal for zones, and the numbers are 0, obviously. This is where we start. Then we have 25, which is 25%, 0.5, 50%, 0.75, right? And then you have 1. So you break things down into 4 equal zones. And if you look to the left, go back in June, this is June, and this is May, this is April, this is March. You can see that even that you mark the areas based on July, you can see that these levels do give you some sense, some meaning on the price action. Right, look at that, resistance, resistance, it broke it, it hit that level, and then it came back to this level, and then it went all the way up and breaking through each level one by one. Okay, the same thing happens now. Look at that. Okay, remember that we did say recently that we had all these levels as a resistance, right? Look at that, 50%. The red line is my 50%. Okay, the green is the 0 and 1, the start and the end, so to say, of the range. And 50% is my red line. And look that, you know, that again, even on the previous month, that we hit the same red line. What's a red line? 61.752. Let me go back to my original chart, and what do I have as my red line? 61.787. You see, very close. It doesn't need to be pitch perfect with my style and your style, right? My 61.8, so to say, is based on a range, not on a monthly time frame or such, but on a range, okay? Price action range. And what I did, to be honest with you, and for you to understand why my numbers are a little bit different, is I took the last impulse wave, the very bottom to the very top, okay? And I broke that down, and I keep that since then, okay? What we did on this example, we just took the easiest way, the easiest path is to mark a monthly range on the previous month, on July, okay? This is not a case who is right and who is wrong. Which levels are right? Is it the one that Silas did on the impulse, or is it going to be my chart because I did the last monthly range? It doesn't matter. There's no comparison here, right? It's not about being right and wrong. It's about marking an area that you can understand, and you're going to mark levels for you to take some action. Because what is the purpose of a trader? You and myself. The purpose of the trader is to mark out levels and make sure that we're going to have a small journey from point A to point B. Okay? So this is the easiest way for you to do it. So for me to reply on El Sari, the lady that she came earlier and asked, this is the process that I'm trying to answer your questions, is for you to break them down in a nice, easiest, practical way without being biased. You don't need to listen to anyone. It's good to listen, it's good to learn. But when you are about to start trading, okay, this is what we teach here. We teach that you can walk on your own, right? This is what we do. We teach you that you can trade on your own. You're not going to wake up every morning and wait for the rest of the life what Sheldon's going to say, or what Ryan is going to say, or what I'm going to say. You're going to wake up one day and you say, okay, that's it. I'm closing everything. No radios, no TV. I'm not listening to Twitter. I'm not listening to Instagram. I'm not, nothing, not even a newspaper. I'm going to close everything down. I'm going to open the computer. I'm going to see the chart, clean everything, and I'm going to start my own without not even trying to see my post, right? Or somebody else's post. You need to do this on your own. You can do it. You can walk, you can run, you can fly. I promise you, you can. But at the beginning, it's a little bit difficult, and I understand that as well. Okay? And this is not, a race. Who's going to go there first, or who's going to make more money? It's irrelevant. What I want to make sure is you understand how to chart, how to break things down into levels, and make the right decisions upon your own timing. Because I may live in the Mediterranean, in Greece or in Cyprus, whatever. Okay, whatever I live, I wake up in the morning my time. Okay, I open the chart at 8 o'clock. That doesn't mean it's going to be the same with you, that you live in Australia, or you may live in Africa, or you may live in North America. Okay, and you're waking up on your own time zone, and you're going to open the chart on a different time. So you're going to see the chart from these levels, because this is the time that you woke up and you see weakness. In my time zone, I'm going to wake up here and say, oh, look what happened while I was sleeping. Now it's going to move to the upside. So this is trader A in, I don't know, in America, and then this is trade B in Asia. And like, 12 hours apart. It's timing, remember. So you don't need you in Asia to follow someone that is in America 12 hours before you that he saw the market differently. Okay? So you need to understand this. You don't need to go 100 blindfold and listen to Thales because I am in, let's say, in the European region, I am in the middle, right? I'm somewhere here. I'm in Europe, right? So this is America, this is Asia, and me, I am in the middle. So when I wake up in the morning, I see different things, right? I may wake up later and I say, oh, look at that, resistance, I'm going down short. And you're like, no, go long, look at that, it's going up. And I'm like, no, this is resistance, I'm going down, right? And then you have two traders saying two different things. And you're like, okay, who's the stupid one now? Nobody's stupid. He's going to be making profit. He's going to be in profit. And that guy going short, he's going to make profit as well. Why? Because of the timing. So timing is very crucial. So that's why, don't worry what I say when I say. Make sure that you're going to have a nice chart that you understand on your own view, on your own time zone. Okay? Right, next. Now we broke these levels. What do we do next? Right. I want you to remember that 50%, the red line, that's why it's red, okay, is very, very crucial. Okay? And then I'm going to discuss about time frames as well. But this is a daily. And you know that 50% is a tough one. Okay? Let me go down to 12 hours, even 12 hours, to get more a little bit definition, so to say. This is, this is what you can. This is what you have. This is resistance, and then finally broke it. And now you have the understanding that maybe it wants to test that as a support, right? So if I was you, waking up now, my local time is 11 o'clock, and I'm like, okay, what I'm going to do now? I have all these lows are getting higher and higher and higher. Okay, I broke my structure. Nice. I broke that resistance finally. Okay, now we've got this new high. Right, and now I need to see where the low is going to go. So if my Bitcoin is on an uptrend, what kind of trades do I look for? Longs, right? Okay, cool. But on every situation, on every market, you have a major push, like an impulse, and then you have a correction. And then you have an impulse, and then you have a correction. The impulse is larger than the correction. Okay? Now, you need to make sure that every single time that you're trying to enter a trade, it's going to be either on support or resistance. So if you're looking for longs, you need to be as close as possible to support, not in the middle of nowhere, right? So this is a level, this is another level. So you're going to treat that as support, and you're going to treat that as resistance. Where is the price action? Somewhere in between. Is it a good idea for you to enter now? No. This is how I see it. Right now, no. It has to be more clean than this. Look how many times it touched this area as a resistance, right? Okay, now prove to me that this level here, it's a support. Make sure that you give me an understanding that is support. If I see this as a support, then I feel more confident to put my money in the market and trying to have my possibilities and probabilities to go higher. That doesn't guarantee you 100% that if you see that as a support, that's going to go straight high up. There's no guarantee, but it's a high possibility. This is a game of possibilities, not a prediction. Okay, so I do not predict that it's going to go higher, But what I'm saying is I need a proof that the ones that was a resistance and was a very bad resistance, not a bad one, but a tough one. Okay? Once, twice, 3 times, 4 times, 5 times, 6 times, and then you finally broke it. Fine, good. It took 6 tries. Now I need to make sure that I treat this as a support. Is very crucial. So is it a good time for me to enter now? No. Let it finish the pullback. Make sure that all the bodies that you're going to have on this time frame stay closing or opening above the line. Once you get this kind of evidence, when price action cannot go any lower, then you're going to say, I think it's treating this area as a support. It tried once to go down, it did not let it go. Second time, no, it didn't let it go. Then I think this is a strong build, a strong support. Because I had price action below in the past, now I have price action above the current time. So you're going to treat this as a support. And only then you're going to say, okay, what are my possibilities? What's going on? You're going to see other factors. You're going to see the market cap. You're going to see what Ethereum is going to do. You're going to see what Dix is going to do. You're going to see other factors. Not what Thales is going to do or what Sheldon is going to do. You don't care what these guys are going to do. Remember, you need to stay unbiased. Okay? It's very crucial that you stay unbiased. You need to do this on your own. Now, time frames and candles, which was one of another question here. When do I take the decision for me, to enter? That again has to do with your style. What do I mean by this? Myself, I'm a swing trader. Okay? I don't, especially this time or the period, the last 2 months, because I'm very, very busy with my day job. I have a huge project that I need to finish. It takes me away from the charts, right? I don't have a lot of time to play on the charts. So I need to see large time frames. I watch weekly, monthly, and 2 months time frames. Why? Because I don't have every day 5 to 6 hours to do this as a full time on my chart. That's the only reason why I watch these time frames. Okay, my minimum time frame is 12 hours, right? Because I need to see a little bit of resolution. I like to see details on the candles. 12 hours is my lowest time frame. But if you are a day trader, you're going to have a different time frames. As a day trader, you may have 1 hour time frame. Okay, you may have 4 hours time frame. You're going to have more detail than me. And if you switch to 4 hours, you can see that you have price action in a range. Now what it's doing? It broke the range, out of the range. What's going to do now? Retest the range. What do you want? You want to stay above. And then as a day trader, you're going to decide that you're going to go long. As long as it stays outside of the range. That was a range. It broke the range finally. Now it's out of the range. You don't want to see Bitcoin coming back into the range. Again, the same levels. The previous month range, but you're on a different time frame. Same levels. Okay? If you are scalper, you may go down to 15 minutes. And you're like, okay, what do I have for the last 15 minutes? Alright? What the scalper sees, I'll tell you what he sees. He saw that as a range, and then he lost it. He lost the range. What does he do? He goes short. Until he's going to reach the support. It's a different time frame. Different style traders, they're going to have different actions. Okay? Why? Because they're going to react differently according to their own style. The time that they have on the chart, the time frame they're going to watch, they're going to have a different approach. Now, a little trick that I want to give out to the newbies, and not only to the newbies, because I don't treat you as a newbies, I treat you as a fellow world traders. Okay, I want to make sure that I'm going to make you transform you to a whale. Is I want to make sure that no matter what time frame you're going to trade, please follow the same direction as a long on the longer time frame. So if Bitcoin since, let's say, August the 5th, you can see all the lows are getting higher. So let me do this with a line. You can see all the lows are getting higher and higher. Okay, that's a low that is that low, higher low, higher low, higher low, higher low, higher low. So this is an uptrend. So I want to make sure that if you are in an uptrend, I want to make sure that no matter what time frame you are, please make sure that you go long. If the longer time frame, the big time frame, like the daily or the 12 hours is indicating you that is uptrend, make sure that you bet for longs. Okay? Why? Because the up moves, they're going to be bigger. Look the up move from bottom to there. Let me increase that. Look at that distance from there to there, and look the correction. A big push, correction. Big push, correction. Big push, correction. Big push, correction. So if I measure this from here to there, it's 11%. But if I measure the correction, it's going to be, come on, give me the tool, thank you. It's going to be only 5%. So which side do you want to be? Do you want to be on the 11% or do you want to be on the 5%? Do you want to be on the big move to the up because it's an uptrend, or do you want to be on the correction? So I prefer to be on the good side, the big side, okay? So that was a correction, that was a big push, small correction, keep on pushing, correction, that is a correction. That one here is a correction. A push to the up, we call it clusters. People that follow us on the web room, they know what a cluster is, a correction, right? And then a big push, okay? So look at how much the correction is, and look how the up move is going to be. It's always greater on the same direction, okay? So please follow the direction. Don't be the salmon. I usually say that as well. Don't be the salmon. Don't try to go against the flow, okay? That's one thing. Now, if you're a scalper and you're going to do 5-6 trades per day, obviously the market move that follows the direction is going to be much greater. I mean, look how powerful is the up move, and then consolidation, and now correction. You see the correction is very slow and painful, but look how big and strong is the up move. Okay, so always make sure that you follow the trend, okay, on any time frame. If you see that the big time frame is telling you that the daily or the 12 hours is telling you that we are uptrend, I mean, let's go back to the daily. Right, here's your daily. This is a low, higher low, higher low, higher low. It's an uptrend, right? So it's clearly indicating you that we're going up. And look at the big yellow candles, right? And look, the gray ones are very small ones. So don't go for the corrections, go for the big moves. And that will help you also to build patience and wait for the support. That yellow level here, the yellow area that I mark on my 50%, right? This is the area that I need to pay attention, and I'll wait, okay? Don't try to chase the trade. It's not a race, a sprint race. It's not a seek and hide, okay? It's about you waiting for the right moment. I say, hey, I need to make sure that you treat this as a support. Now, we marked. Let me go to the questions. Let me have a look on the questions. Make sure that I don't miss anything. Yeah, Sam says I see everything and everyone, and that's no problem. Yep, because it's going to create a doubt, and then you don't know who is who and who is right, and you don't know which one to follow. That's a common problem. Now, further my question, how do I now apply the indicators for snubber entries and exits? Okay, I'll do that. Okay, now, again, which time frame would you like to talk about? Because I give you a different approach on different scenarios here. If you're, a day trader, scalper, or a swing trader. I'm a swing trader. Okay, swing trade.
4 hours.
4 hours. Okay, that is kind of a day trader. 4 hours.
Yes.
So would you all like to talk about 4 hours, 1 hour, 4 hours? Okay, around 4 hours, 1 hour. So day trading, basically, right?
Yes.
On and off. Okay, on and off on a day. Okay, day trading. So we mark these levels based on the previous month. Okay, now on the daily time frame, these levels are looking nice and neat, like close to each other. But when you're going to move down, let me go to the daily. Here's your daily, all right? They look nice and neat, right? And close to each other. So nice. But if you move down to 1 hour, right, they're going to be a little bit more apart. And you're like, oh, do I need to wait all this time? Look how far they are from each other. It's like 6% apart. Two things you can do. Two things. One, you shift, you move from 8 zones, sorry, from 4 zones to 8 zones. So I have a template here. So I move my gangster view from 4 to 8. And what I do are put extra 50% lines in between. And you are more than welcome to mark them out. So this is your, let me mark this more correctly. So here we are. So here's your 8 lanes. Here it is. I'll put it on the chart. Let me mark the 4. The 4 is very easy. Okay. It's an increment of 25%. 0, 25, 5, 75. All right. The 8, which I'm going to put it back again, is in between the 0 and 25. The half of the distance between 0 and 25%, it's the 12.5, right? If you divide 25 by 2, you get 12.5. So this is 0, 1, 2, 5. 0, 3, 7, 5 is the distance between the 25 and 50. The 62.5 is the distance between the 0.75 and 0.5, halfway. And the 0.875 is the gap between the distance between 0.75 and 1. Okay, so I hope it makes sense. So you break them down even into smaller zones and look to the left, and you can see that even that you broke down the 4 lanes into 8 lanes, that the price action still makes sense, right? I mean, I'll have a look here. I can't walk. Here we are. So you have a sense here, right? Here and here. So that's the range. Remember that I marked the range as well. That's the range for the scalper. Right. This is 1 hour now. And that's the range that I marked earlier. And you lost it. Okay? Now, this is the good part. Entries and exits. Okay. So, now that you have the levels, right? These levels are going to help you to make decisions. And you say, okay, this is a big move to the up. I woke up around this time. This is Asia time. Okay, I woke up around this time. That was the support, and then I lost it. And I tested that that support, it became resistance. It broke it twice. Tested that level twice. Look at that. I'm gonna make a path tool. So it broke it. 1, 2, and then it went down. Okay, so you have 2 retests. That one here, and then you have another one there. Right? So you know that it cannot hold this level. That level of 63.8, it has no power to sustain it. It's losing it. It gives you a nice hope, and then it's giving you a warning. And you're like, oh, what's going on here? Why did it go under? Why it did not came back up above the line? And then you have the second retest. And you're like, okay, you know what? I'm going down. Okay? And that is a small trade, a short-term short trade. Short-term, a short trade because it's going down. Okay? And now that you have the conditions, because that's the conditions, you have these lines for you to have your conditions. Right? If you have evidence, a lot of people will say, let me go a little bit back. If you see something like this, a lot of people will say, oh, this is a support. Okay, where is going to be my entry? Okay, long position, that's my entry, that's my exit, and my stop loss is going to be under that. Fine, no problem. And then what happens? Okay, let me go forward. And you got stopped out, right? And you're like, okay, that was a failed trade. I'm going to cry over it. No, I'm not going to cry over it. That's why I have a stop loss. If my stop loss got tricked out, the stop loss helped me to save money. It saved me, right? Not losing a lot of money. I had a stop loss of 0.43. So I lost a 43% against whatever your leverage is. I have a tool for you to understand which, what leverage you should go. I have my own formula there. But once you see this, then you automatically say, okay, you know what? That support, it just got broken. And I had 1, 2. What next? Well, you're going to do the opposite immediately, straight away. You're like, okay, you know what? This is the current price. It's failing to go above this line. So this is my stop loss. That's my entry. This is where the price is right now. And my next target is my next level. And I take things one by one. What's the ratio? 4.2. It's more than 3. It's good. What's my stop loss? 0.6. Not bad. And then you're going to let it play. And it's still in progress. It doesn't matter when you enter. You see, I took a random entry here. But what was my thesis? My thesis was I have a level, a line that I pay attention. At the beginning, I thought that was a support. Right? That was the evidence that I had. Or everything was staying above this line. And I went for long. It did not play out. It came down. And then it gave me evidence that it lost that support. And it became resistant. Then you flip immediately. You flip immediately and then you enter, and your stop loss is going to be against that line. Because if price action in the future comes above this line, then this thesis is invalid again, once again. Okay? Now, do I make it sound easy? It is easy. That's why. Why it's easy? Because you have the lines now. You mark the areas. You have the lines, you have the levels. You need to make sure that this is your starting point. Okay, this is your starting point. That's your start. Okay, and the finish line, it was on the first trade, that line. That was your finish line. Okay, now if the market decided to go the other way around, now your finish line is going to be that one. That's your finish line. And you go level by level. Okay, now You see the Europe and after the Asia, what's the time? 12 o'clock. Yeah, that's part of Asia. That's part of Asia. 11 o'clock in the morning, blah, 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 blah. That was the previous. Yeah, that was Monday. So that's Tuesday. So Asia is dumping. And what it's going to do now, Europe? Europe may try to stall these, trying to hold it, but I don't think so. They're going to drop it. There's a huge imbalance down here on the left. More likely, I would like to see that it's going to come back to fill this imbalance. There's a big imbalance there. So it has a higher probability that it's going to come back here. And this is a big push that it happened. That's a huge order block down here. So there is a possibility that it's going to give some deviation and then come back again. Maybe. But before we get there, make sure that you book your profit when you hit that red line. Okay? That red line, remember, it's the 50%. It's the only red line that you have. It's the 50%. It's a tough one. Okay? Look how many times it touched that as a resistance. Okay? So you expect that to be a support. You expect to treat this as a support. We expect. We do not predict. Okay? And this is the easiest way for me to teach you how to take trades, because it's very important for every trader, no matter what time frame you're using, no matter what kind of type of trader you are, swing trader, day trader, scalper, you need to have your levels. Why? Because the levels are going to give you the start point and the finish point. And this is the most difficult part for a trader, to know when to start, when to enter a trade, short, long, okay? And the most crucial that a lot of people don't know is when to exit, right? Now, in the school, you're gonna learn let's say that you're going for long, right? What we usually say, mark the previous highs, okay? Head for the previous highs, okay? And this is a general rule. And the same thing with going short. When you're going short, you're going to find the next support lines, right? You're going to say, oh, I had a nice support here. That's going to be my take profit. With the lines that I have here, I prefer to follow my lines instead of going blind here. Why here and not there? Or why here and not there? That's another support, that's another support, that's another support. A lot of people will see different levels. And who's going to be right? And who's going to be wrong? No one is. But instead of me going blindly, right? Everyone has a different view, remember? Someone's going to put a take profit there. Okay, somebody else will put a take profit over there. For XYZ reasons. Okay? Who's going to be right and wrong? I don't care. Okay? This is not a competition who's going to be right and wrong. Is I need to mark my levels and I go step by step. If I hit this level and I book my profits, then I need to see the price action once again. What it's going to do? It's going to break it. If it's going to break it, then I'm going to continue shorting. If not, if it's going to stay above and then start moving, then, I'm going to go long. And I'm going to have a new finish line. And this is how I trade. Level by level. Okay? Now, if I'm a swing trader, I have bigger range. Okay? But if you're a day trader, you're going to have small ranges. And when I'm talking about ranges, I'm talking about these levels. Okay? That red line to that white line. That's all it is, This is how simple you need to keep your trading. The simpler, the more simple you keep it, the more profitable you're going to be. Okay? And you don't need to be biased by anyone. You just need to read the chart and have the levels and then take actions according to these levels. You lost that level? Okay, it means weakness. What do we do in the weakness? We're going short. Simple as that. You show me strength around these levels, like, let me bring another level here. So here we are. It came down, it pushed to the up, weakness here, it cannot go above, it went straight down, and then it claimed these levels. And then you got this retest. You have that deviation, and then you have a retest as a support. And you're like, okay, you act in support. I have evidence of support. And then you move to the app until this line. If you manage to catch that, fine. No, the second one, the third time, here's your times, multiple chances for you to take your profits. Okay? And then it tries to go above, but then it fails. It comes down again. You say, okay, it's not strong enough. So you book your profits, right? You don't wait to come down again on a day trading. Day trading, you want to go in and out very quickly. Okay? What's the profit from here to there? 3.5%. If you do that on 10x, for example, that's 35%. It's not bad for a day. It's not bad for a day. And also, it's very important for you to have your daily targets. You need to have daily targets. Make sure that you have breaking them down. I have another approach for that as well. You need to break them down, your needs, and you need to know how much is your daily target. I mean, let me bring my Excel sheets. Give me 1 second. I'll bring that up for you. It's on Google Drive. I share that with everyone. Give me 1 second. I'll bring up my Google Drive. Right, okay. Recovering, compounding. What's your target? So here's the let me make them bigger for you to see. So I have this Excel. More than likely to share that with you. So here we are. I'll copy the link for you. Feel free to use that Excel sheet. Okay, I have little tools there, little hidden tools. So you need to have your targets marked out. Okay, and every person, this is what's your target. Every person will have different numbers. Okay, but you need to know this. Okay, and what I usually do is I mark down, so to say, okay, what is your monthly expenses? You need to know how much do you need to survive. And every person, because they're living on the different areas, different countries, different status, people are married, other people are not married, other people have children, things are different for every single person. You need to know how much you need for you to survive, right? And I want everything, like your rent, your food, your clothes, your travel expenses, all your expenses all together. Okay, so for example here, I just put 1,500. Okay, 1,500 roughly. Okay, and if I change that, let's make it to 2,000 for you to give you an example. If I change that to 2,000 because my expenses, I live in an expensive area, or I have 3 children, and the little ones, and they have high, a lot of things for them. So let's say my expenses are around 2,000. Then you see the numbers change, right? So my monthly expenses is 2,000. My target is around 600. What is that target? Why that target change? Why it shifts? Well, that target is telling you the number that you need, the amount of money that you need for you to be financially independent. And this is the trick here. This is what we do here in the crypto school and the whale school, is we need to find a number that's going to make you independent. So if your expenses is around 2,000 per month, for you to be financially independent, all you need is $600,000. A lot of people say, oh, I need $1 million for me to be independent, or I need 5 million or 10 million. Well, let me help you that. and fix that number for you, because a lot of people think that they need $1 million for them to be financially independent, but no, you can start as low as 600,000. Okay, if you have $2,000 monthly expenses, if you manage to make money on trading or have savings up to $600,000, that means you are financial free, or towards you moving. This is the start of your financial freedom. And why I say that, because that $600,000 is going to last you for the next 25 years to cover all your expenses for the next 25 years if your expenses are 2,000. So you don't change your lifestyle, you have the same lifestyle, but if you manage to save $600,000, that means for the next 25 years you're going to be covered. And if you, let's say, you know your monthly expenses, you know your target, then you put a deadline. When do you want to reach that financial freedom? Will that be in 5 years? Will that be in 3 years? Whatever that is going to be. So I put random 5 years. All the business plans out there in general, they're talking about 5 years, right? So to meet that goal, to reach that goal, like $600,000, I want to reach that in 5 years. That means that my daily target has to reach $462, right? That's my daily target. Okay, your weekly target, it needs to be around 2,300, right? Your fortnight, which is 15 days every 2 weeks, you need to reach 4,000, right? You need to make in trading. Monthly, 9K. If someone comes up and say, hey, you need to make 9,000 every month, you're going to say, you are bananas. How on earth a new trader will be able to make $9,000 dollars per month, right? But if you break them down to daily and say, hey, your daily target is 462. A lot of people will not understand. If you manage to do that every day, then by the end of the month, you're going to make that 9,000. Why? Because the smaller numbers are easy for us to digest, okay? But if you do that 9,000 per month, that means in a year you make 120. And in 5 years, if you multiply that by 5, then you reach your goal, which is 600, okay? So here's your number, 462. Now, let's say that you have only 1,000 to start with, or $500 to start with, and obviously you're not going to put all the money in. So there is no way from day one for you to make 462. I hear you, I know this. Right, now my daily target is 460 or 450 roughly, okay? Round number, 462, we can put 450. Now let's say that you have $500 to start with, okay? And I want you to have, this is a table of compounding, which means your daily targets, right? What are your daily targets? 5%, 10%, 50%, 20%, 25, 30. These are examples. I usually target the 20. I want everyone to have a 20% win trade per day. That's all I want for everyone, for you to have, is 20%. If you do that on your first day, let me open up a little bit of the table. If you do that, you start with $500, and the first day you make 20% profit, which means you made $100, right? 20% on the 500 is $100. So the first day you make $100. That is already 20% of your daily target. And you're going to say, yeah, I hear you, Thalis, but it's only $100. Remember, the target is 462. Yeah, I know that. But what did I say? There's no way on day one that someone's going to reach that $460 profit per day if you start with 500, okay? But I want to have confidence in yourself, and I want to, come back the next day and then target for another 20% the next day. The next day, your capital is not 500 anymore. It's going to be 600. So on day 2, you start with $600. You target it again 20%, and that means you're going to gain $120 on then day 2, right? So on day 3, right, you're going to start with capital of $720. So the first day you made $100, the second day you made $120. All you did is target 20% per day. Day 3, you start with 720, and you understand the deal. On day 3, your profit is $144. So day 1, 100, day 3, 144 is increasing. That it means it's compounding, okay? 20% per day. Now, 450 we said, it means roughly you're going to hit that number on day 10. On day 10, by having only 20% per day profit, only 20% per day profit, by day 10, you're going to reach your daily target. Remember the daily target? 450, roughly. You break that 450 in profit per day on day 10. So, 10 days later, after that you start with $400, you are now hitting your daily target. And that will be the time when you're going to say, okay, time is on. 10 days later, now we start the journey to hit the daily targets. And then you're going to go for the weekly target, which is 2,000. But let's go back to compounding. That is only by 20% per day. Okay, you target to increase your wallet by 20% per day. A lot of people are going bananas and they're going like 50% per day, 60% per day, 100%. You know, let's go to Discord. Let's bring Discord here. Let's go into a room. I mean, it doesn't matter. Let's go to bragging rights. Okay, what do you have here? 53%. Right, 64%. Let's go higher. 30%, 52%, 400. Like he's a millionaire. 400%. Right, 57, 47, 29. Okay. 204, 308, and 132. I don't need these numbers. All I need is 20%. Okay, you don't need this. Seriously, don't go for these huge, nice tiles and numbers like, oh, look at that, 308% on 25x on rare. Okay, good. But how much was that in money-wise? All right. You went on 25x and you made 308%. Good on you. Well done. Right? Big celebration. But how much money did you put in as your trade? Because I need to make sure, I need to translate that. I need to translate that 308, how much it is on your wallet. I need a 20% per day, not 300. All I need is 20% on my capital, on my wallet, on my trading wallet, okay? So I need to make sure that on day 1, if I start with $500, I need to make sure that on my day 1, I need to make $100. So is that 308% equal to $100? And then congratulations, fine. You just hit that 20% per day, okay? Because a lot of people, when they do these big leverage, they don't usually put a lot of money. They put like $5, $10, $20, and then do 50x. And then they're going to bring this nice towel. Oh, I made 1,000% profit. Yeah, on $5. Thanks. That's not trading. Okay, this is gambling, and you just happen to be lucky. One of the few. Okay, it's not going to happen every day. I promise you that. So, let me switch on the AC. I'm sweating here. Give me 1 second, guys. I'm back. Sorry for the feedback headphones. Right, okay, here we are. it is warm. It's still warm. How much? It's not. It's not that bad. 36 degrees, but it's okay. Right. Okay. So you need to have, a starting point. You need to know your numbers. So more than welcome, use that tables. Start with what's your target. Make sure that you know your numbers, and then once you have a number, a daily target, a weekly target, then go to compound, and see with the money that you're going to start, change that green table there, that green cell, to any number that you have available for you to trade. Maybe it's going to be $100. It's fine. Okay, don't be ashamed. It's $100, and then you're going to see how long it's going to take you to hit that number. So if you start with $100 with 20% profit per day, which means you made $20 on the first day, right? That's 20%. Now, if you made $20 on the first day, for you to reach that daily target, remember the 462, it's going to take you a little bit longer. It's fine. It's going to take you 19 days. It's fine. The point is for you to reach that level. Once you reach that level on day 19, then you're going back and say, okay, after 19 days, this is the first time that I hit my daily target. Now I'm counting. This is my day one of my journey. Okay, after 19 days, you're going to have your breakout. Somebody's asking if the Fibonacci is the same with the gun box. Yes, it is the same. The gun box was very limited with the fields. I can only break down into 4 zones. When I wanted to break them down to 8 zones, the gun box wasn't giving me the option to add these numbers, so I went back to Fibonacci. Okay. Is that cold in Leicester? Oh dear. 100 degrees in South Mississippi. That's hot. 100 degrees Fahrenheit. I was talking. Hi.
Can you hear me okay?
Yeah, I can. Go for it.
Oh, good. Would you mind showing us how to apply those Fibonacci levels again, please, for the 0.125, etc.?
Okay. So here's your Fibonacci tool. Double click, and here are the numbers.
And that's in the settings part of the Fib tool, isn't it?
Yep, that's the Fib retracement tool, and if you go to style, it's giving you all the settings in here. It has lots and lots of fields. That's why I use the Fibonacci tool, but I reset the numbers, right? So 0, 25, 5, 75, 1, and then the smaller parts, 0, 1, 25, 0, 3, 75, 0, 65. I posted the picture a little bit higher on the chat. You can see the numbers. I can do it right now again.
Brilliant. Thanks.
Fine.
And would you mind applying it on the 1 hour time frame to an altcoin from last week?
Yeah, give me the
just
coin.
so that we can get a feel
Give me
for
the
where
coin.
you'd place it on the chart.
Yeah, give me the coin. What's the coin?
Matic.
Matic. Right. Okay. On which exchange do you see that?
Well, probably Binance because it's the biggest liquidity, I suppose. If you don't mind, thank you.
So here's Matic and proposals. Here we are. So here's Matic, and I'm going to clear the drawings. I have none on Binance. Here we are. And on which time frame you are using this?
1 hour, please.
1 hour. Okay. So I'll go to the daily. Let's say daily, or I can go into weekly. I'll tell you why. I'll need to break my levels, right? So we gave the example of the monthly. You can do the same thing with weekly. So that's the current week. That's the current price, right? I'm going to do the same approach very quickly. This is the current price. I need a candle that has data above my current price and data below my current price. And the previous week is a good candidate. So I'm going to take that. So I'm going to mark down my Fibonacci from the very top to the very bottom. And I use my control key to enable my magnet, right? And that makes sure that my levels are not moving around. They're going to be locked on the highest point and on the lowest point, right? If I press my control, double click, and go to coordinates, and I'm going to move without moving the levels, make sure that I don't lose the levels. I move that to the right, 230, and I move that to the left, maybe 150, and now you have your levels marked. And I make it a bit closer to me. Let's lay 220, 210, maybe 210. Yeah, that's a bit closer. Lock, padlock, and then I'm going down to 1 hour. Here's my 1 hour. Right, and I can even bring them even closer for me to have a look of the numbers. So no, 1,000, a bit closer please, 500. Here we are. So you can see the numbers, because you need to know the values that you have in here. It's in dollars, right? So this is a level of 51 cents, 53 cents, 56 cents, 56 cents, and 58 cents, and etc. So here are the levels on Matic based on the previous week. So this is a weekly range. So when you hear someone say, oh, this is a weekly range, they don't mean in horizontal matter of Monday to Monday. They mean, right? Because that's another concept that a lot of people misunderstand. When they say weekly range, it's not Monday to Monday. It's high to low on the previous month, or on the previous week, right? So on the previous, let's say Monday, right? So let's bring Monday. So that's Monday. That's the lowest of Monday, and that was the highest of Sunday. This is Sunday, right? So when you hear a weekly range, it's the previous Monday and Sunday, but in a vertical matter. So this is previous week range, okay?
Sorry, my video is about 5 minutes behind. What prices have you got for the top and bottom? And I'll put it on my own chart. Sorry.
Okay, no worries. The bottom is 0.40. The green numbers are the bottom and the top. So 0.4090 is the bottom. 5819 is the top.
5819. And do you only use these fib levels, or do you use the 618382 as well in some cases?
Well, this is the gangster fib. This is the levels that I mark out for myself. Now, if you want to combine with the original Fibonacci sequence, which is a 618, that's a different story. You can do that.
Okay,
As
so you
in
different
Sniper Club. Yeah, I like not to mix them up.
Yeah,
I love both of them. Very strong. Both of the levels are very strong. Fibonacci, I've proven the Fibonacci is very strong in the past. But it's a psychological tool, right? Everyone is waiting for that 618. And when they see that 618, then everybody jumps in. So it's a more psychological tool rather than technical tool. So I'd rather break them down into equal levels, and then I go level by level.
Brilliant, thanks. That's really good.
Cool. And then you just take it, level by level. And you say, okay, that was my top level, for instance, right? You wake up in the cold west over there, and you're like,
Yeah.
so let's pretend that, okay, this is 1 hour. So technically what you've seen that you lost that level. You woke up this morning and you saw that since yesterday, like Monday, it lost that level, right? It did not approach hard on that 50%, that red line. It's trying to push one more time, but it has no strength. It's showing some weakness. It cannot not even touch that. So most likely it's going to come down and hit that, because anyways in the downtrend. So
yeah, there's
you're
a
not
really
looking.
interesting accumulation between the 0.75 and the 625 after you've put those fibs on.
Yep. So you need to wait and see what's going to happen, because so far I see a nice big move because of Bitcoin. Okay, thanks for that, Bitcoin. You help everybody else move, and then you see weakness. It's dropping, right? And you say, okay, now I'm in a downtrend. I'm on 1 hour. So you're on a downtrend, so make sure that you're going short and you go level by level. Now, if you woke up this morning and you are in this point, then go short until this point. If it wants to continue, good on you. There is some imbalance going on there, so there is a high possibility that's going to fill this imbalance. So for you to go short from here to there, it makes sense. It's a downtrend anyway. On a 1 hour.
Yeah,
If
especially on a
you,
small time frame.
yep. If you want to look at the bigger picture, you're going to zoom out a little bit and say, oh, hold on a minute. If I see the bigger picture, what do I see? I see these lows, right? And I see these lows, and now it's going to create some new lows. So there is a possibility that's going to hit that red line and then turn around, right? But on the 1 hour, you're going to downtrend.
Yeah.
When you're going to see a support, it means for many hours it's going to stay there. It's not going to be hit and run. It's going to stay there for a couple hours, maybe a day or two, right? When you see that, it's going to treat as a support and say, that's the case of a new higher low. There's a possibility that's going to keep that support, and then you're going to bait.
The 50% mark as well, doesn't it?
Exactly. So you're going to say, oh, look at that. It's a big uptrend. So let me, my possibilities from this point to go higher, a bit higher rather than go lower, because it's acting as a support. If it's not going to act as support, it's going to lose it. Be my guess, let it go down further. Because in a small time frame, you are in a correction. On a bigger time frame, you are in an uptrend. You're just waiting to see when you're going to get your higher low. Because this is your low, this is another higher low. You're waiting for another higher low. Now, where is going to be the higher low? 49, 47, 45? You don't know.
Would you say it's on an uptrend on the bigger what time frame? Because on the daily, it's more of it could be a pull back upwards before a further down. Do you know what I mean? It's like, which time frame do you judge the uptrend? But it made such a big move.
I always start my daily with the 12 hours. Always I start with the 12 hours, right? And this is the bigger picture. Look at that. Now, if you do a 12 hours, what do you see? Right? Let me do an arrow. That's what I see on the 12 hours. Right? On the bigger time frame. So, okay, here we go again. Matic is trying to push up, but roughly, he's having a hard time. So this is the high, low, high, low, high, low, high, low, high. Here it's trying to give you a hopium that is trying to break structure. But instead of holding and stay above that resistance, it's not acting as support anymore, isn't it? Boom, it goes down. So you're like, okay, that was a fake out. And it comes down, okay? What's the key level? The red line is my key level, okay? And then, if you lose the red line, then it's most likely that it wants to target the base. And you go level by level. That is a bigger picture. This is what I see on the 12 hours because I'm a swing trader. But you're a day trader. You don't know wait all this time. You may, need to wait a month to get down here. You need to make some money today, right now. So you're not going to look at the 12 hours, but it's good for you to start with the 12 hours and see, what's going on. Don't fall for the trap and like, oh shit, it's a downtrend.
Yeah.
It's trying, but it's bouncing off, right? But on the 1 hour as a day trader, right? And you're like, okay, I need to take something more closer. I need to break things down to closer to me, a smaller time frame. Then you need to, it's fractal. You zoomed in with a telescope, not a telescope, with a microscope, right? So you're using a microscope right now, and you zoomed in, and you're trying to see what you can do. So you break these levels based on the previous week, right? And they're good, decent levels. I mean, look at that. It's acting. Price action is respecting these lines. If it does respect these lines and makes sense to you, right, then it's good for you to use them. And look at that. All these lines prior the previous week that we marked. Look at that, the price action. Look at that, how he's respecting these lines. And you're like, okay, I'm happy with these lines. It makes sense. Price action is following these lines. Then it's good for me to use it. And then the simple condition is simple. Like your condition is very, very simple. This is my line. Are you going to stay above? Then I'm going long. If you're going to lose it, then I'm going short. Simple as that. This level is going to help you to come up with a decision and trading plan. And then this is the point of the ground zero that you get into a trade immediately, and then you need to know when to exit. And you're like, hey, this is my TP1 and this is maybe my TP2. But you don't go straight away to TP2, right? You need to go through TP1. Make sure that you grab some profits on the way. And, you take some profits and then it carries on, no problem, right? And then it carries on, no problem, let it go, okay? If, however, on TP1 comes down and then turns around and you're like, uh-oh, it did not touch my TP2, it saw weakness to go further down. So something happened and turn around and reclaim this level. Okay, let me close a trade. And you close a trade on TP1. So you took your TP1, let's say the first time with 50%, and you let the 50% to run, but it came back to the same TP1. Then you close the remaining 50%. And guess what? You got 100% of your trading out on TP1. And
Brilliant. Thank you
and
for
you
that.
go level by level, bro. You don't try to guess. You just take level by level and say, hey, you show me which way you're gonna go, and I'm following. You wanna go higher? I'll go long. You wanna go lower? I'm going short. I don't care who you are. It's Matic, it's Bitcoin, it's Ethereum. You don't care. You don't care. What do you care? I'll tell you what you care, Sam. You need to find a chart that moves. That's what you care for. And how are you gonna do that? I have a watch list, and then you go to the change, and you're going to see the big numbers. Who's got the big numbers? The red ones or the green ones? Oh, I see a green one. Who? Gala. Okay, Gala. Open Gala. And you're like, oh, what's going on with Gala? It's doing like 3% move. It's not a big one for today, but let's pretend that it's the biggest out of all. That's the true utility watch list. I have, let's say, Bitgate, with all the tokens in Bitgate. And then I'm changing.
Yeah, I've got that for mine. Yeah.
Yeah. So switch them to, see the big numbers. 6.5 on TON, on the green. What about the red ones? Go all the way down to the red ones. 9% on CHR. Okay, it's 50-50. You got, equal amount of red and greens here. So let me have a look.
Cat dog.
Cat dog. Yeah. So here we go. You've got Ton, Flocky, Fetch, right? You've got all these that are moving. Okay, so you go to Fed and you say, okay, Fed is moving. Look at that. What do you need? You need a chart that it moves. That's all you care. Why? Because you need the percentage. Remember, 20% per day. That gave you 77.
Yeah. What
Right.
other indicators do you use with it?
Indicators. Okay. Indicators. I'm using stochastic RSI. Let me bring my big boys here, my agents. Ladies and gentlemen, please meet my agents. It's Mr. Stochastic RSI. Then we have RSI. We've got ASO, and then we have Mrs. Volume Delta. Volume Delta is it's a little bit different. I use it to clarify a little bit the volume, the volume that everybody knows. That one here. So that volume here. Let me clear that away. So what's the difference? Let me bring these two together. Closer, a bit closer. Here we are. So now we've got these two guys together. Right, here we are. So you have volume, the traditional volume, and then you have delta, volume delta. What are the differences? I'll tell you exactly, immediately, straight away. This guy here, right, what he's doing is giving you the volume, which equals buyers plus sellers. These two together is giving you volume, right? However, you don't know, you do know a little bit, but not all of it. The size of the bar is giving you the size of the volume, but you don't know by how much it's the buyers or the sellers. you only know by color. When you get a green one, you know that the buyers won. If you get a red one, then you know that the sellers won, but you don't know by how much. What is, how bad was the buyers that they won the sellers, but how much, right? It's like the score. The delta, volume delta, right, is the difference between the buyers minus the sellers. So here it's giving you more information who won by how much. Okay, so I treat that as an insider to tell me exactly what's going on with the volume. I prefer to have the delta to tell me how much we have the winners. So the gray is telling me that the sellers are winning better than the buyers. And on the traditional volume, you have green bars, but the price action did not move, didn't it? You have all these three these three green bars by volume. It's not matching with my price action. Price action is doing like nothing, nada. You have smaller green bars and you have bigger price action. You have these huge green bars, but price action did not move. Why? The sellers won the game here. The gray is telling me on the delta that the sellers are pushing the price down. Okay, they're taking profits basically. This is what that's how I translate it. When I see these, I say, okay, they're taking profits. That's why the price action is not moving up. Okay, yeah. This is the big guys. They're pushed up. They marked to the previous highs, right? And they now know it's a good time for them to take profit, and they're taking profits. So do not jump on Fed now. It's too late. But this is how I use the indicators for you to understand, the comparison and why I use these things.
Do you do a wait for a squeeze or a compression before the entry or anything like that, or?
Again, it's the levels. I need to break down these to the levels. So let me get rid of the indicators. So this is my 8 hours. Let's go to the weekly. Here's my weekly. I need, the previous week. Now this is the end of the push. So the previous week, it could be, let me go to monthly. Here it is. Previous month is giving me the range. So here's the top, this is the bottom. Move that to the side, go that to 20, bring that to 10. Here we are. Here's my levels. Go back to the 1 hour that you like to trade. And here are your levels. As quick as possible. And you just move from one level to another. And that was resistance. And that is support. Right? Now everyone is taking profit here, I understand that, but they're still trying to push, right? Look at that, it's going up, come down, support goes up, did not come all the way down here, so it's acting support, it breaks through the level, fine. It's breaking through that level, that was resistance, now it reclaimed it and also retested. So that was resistance, that's the support. So that's a good short-term long from here to there. A lot of people are selling here. Don't be, don't chase that pump now, because there's a high possibility that's going to come up here and then it's going to drop down again. Why? Because a lot of people are taking profits. The big boys are taking profits, the retailers are
it seems a bit unclear today, doesn't it?
Yeah. And you just watch, level by level, and you say, okay, look at that. For the past few days, what do I have? For the past few days, right? Remember what I say. The past few days an uptrend, so I'm looking for longs. Okay, and where do you want to look for longs? For base key levels. The 50% is always a key level. The red line, it's always a key level. All right, so here's resistance, here's the support. Okay, but now they took a lot of. That from delta as well. You've seen the delta. You know that they took profit. It's going to come down now. It's going to do one more push, and maybe the remaining retailers, and they want to do exactly what the big guys did to take profit. So maybe it's going to die off a little bit. It's going to come like this.
Do you use any moving averages at all?
No.
Not at
I
all.
try to use as less as possible the indicators. I'm using the price action. Okay. My indicators are for the bigger scale. Once again, look at that. On the bigger scale than 12 hours is on a downtrend. Okay, this is a high. low high, low high, low high, possible another low high. Lows, low, 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 low. So what are we on a daily time frame? It's a downtrend. That was another try push. You know, when you see exhaustion, when you see that it cannot go any further, it's getting weaker and weaker, guess what you're going to do? Short it. That baby, you're going to target that low. Why? Because you have evidence that the lows are keep on getting lower. So that is a definitely target because it's going to create a low low. So soon, Fed, you're going to short. Soon. That, you know, you have to wait. You have to wait what it's going to do with that red line, right? That red line is crucial. It's your 50%. So if it stays above, you go long. If it's going to lose it, you're going to go short and you're going to target that baby down here. But that is me as a swing trader because I see the 12 hours. I see the bigger picture. I see the big moves, right? I see from here all the way down there, which is 40% move. But a day trader that it needs to make 20% per day, it cannot wait all that long. It needs to make, you know, the daily target. I understand. I get you. 1 hour is fine. I use 90 minutes to be honest. My favorite lower time frame is 90 minutes, which is 1 hour and a half, not the 1 hour, not the 60. Go for the 90. How do you do the 90? Go to the on the time frames here. It says add custom internal, and you say I need minutes and I need 90. Now it's telling me that I already have it. I'm sorry, I have it, but when you don't have it, you say 89, and when you press enter, it goes up here. 89, here it is. Right, and I'm gonna delete that. I don't need that. So, that's the 90. Where's the 89? Where did it go? Oh, that's not here. It's not here. Anyway, it's gonna come back later. Yeah, it's funny. No, I don't see it anywhere. Maybe it's gonna come back later. But anyway, yeah, it's not gonna keep it anyway. 89 minutes. But yeah, I use 90. Right, 190 is my favorite one.
So on FET on the 12 hour, it looks like we're coming to some kind of a resistance area.
12 hours on FET. Okay, let's have a look on FET. Yeah, you see, we are heading to that resistance. I mean, you know, a lot of people, this is what they've seen. They've seen this resistance here, and that's why they took profits. They start taking profits from here.
Yeah,
Because
but you can't
they
short
hit
it,
that.
can
They
you?
hit, yeah, they hit that order block. So they hit that order block over there. So it went inside, and then they're taking profits. So the big boys are not interested to push any further.
No.
But they took some profits. They're going to let it come down a little bit. There's a lot of imbalance. It's going to come back to these imbalances areas. And then they're going to try one more time if they want to push higher.
Give it a reload.
And then maybe it's going to come back to the same level, and then you're going to have the double top. And then it's going to come back again. Maybe. Possibilities. I'm not trying to predict here. Right. But I understand why they're taking profits because of this.
Why 90? Yes. Why 90 minutes?
Why 90? Because it's giving more confirmation about the 1 hour. I'll tell you why. That wasn't a decent answer. Why 90 and not 60? Well, because 90 is better than 60. Really, that's not a true answer, isn't it? No. For God's sake. Okay, right. Trying to break the ice here. So, daily is one of the time frames. Then I split that in two. So I got the 12 hours, right? Then if I split that in two, then I get the 6 hours. Then if I split that in two, I get the 3 hours. And then if I split the 3 hours, I got the 90. Ta-da! That's why I got the 90. I divide everything by 2. 50%.
And then 2 again.
And then 2 again, and then 2 again, and then 2 again. And stuff like that.
Cool.
And also, you know,
Thank
my
you.
50% is my crucial zone as well. It's always like 50. Can I get the link for the Excel sheet? Of course you can. Of course you can. Let me redo that again. Copy link. Here we are. All yours. Here we are.
Do you post any of your trade setups in the whale room?
I do on the whale room, but I'll tell you what, I'm trying to teach everyone to, because I'm against of doing, let's say,
Do it
signaling.
themselves.
Yeah, I'm not trying to give, because that is like spoon feeding you, right? I'm gonna, try to give you the trades and stuff like that, and trades that you don't understand, and that is a big no-no, because if you don't understand the trades, then it will not make any sense, and then you not understand when to get in, when to get out, and why to get out, and how much to get out. So I try to teach people to do that on their own instead of following everybody else. As I said at the beginning, trying to stay unbiased and trying to do things your own way, the levels that you understand, because you need to react. This is the magic that you need to come up with yourself on the trading. Is you need to you need to do it on your own, but also you need to understand that you need to react to the chart, to the price action, according to your time zone, according to your style, and according to your timing, right? Because your timing with my timing are different. I woke up, let's say, in the middle of the night, and I took a trade, right? And in the morning, I post in the room, oh, look, guys, I'm 60% up. And everybody will be pissed off. Why is Alice 60% up and I'm not? Right? It's not cool. It's not cool. What I'm trying to here is I'm trying to teach what I do and why did I took 60% profit. You can do it as well, right? So why I do that? How I do that? I break things down into levels, and I see things level by level. That's my level. That's my level. That's my level. Take it one by one. That was resistance. Now it's flipping a support down here. Is a good thing to go long. Up there, because everybody's taking short, it's a good time for you to take profits. If you did not take that as long, it's a good time for you to short. You see, the timing is different reaction. This guy here, because of his timing, he took a long. This guy up here, couple hours later, 2 hours later than me, it's no point for him, so to say, or her, to see my post on Discord and then go long. This is what happened with Sammy. Was it Sammy? No, Sari. This is a problem. That was a problem with Sari. That she saw a trade set up, and she went long, and then and the other guys had different timing. They were in positive, they were in profit, and then she was like zero, and then almost, she closed the trade manually because she saw that she's gonna get stopped out anyway. So she, let's say, preserve her capital and get out before the stop loss hit, which is okay, not bad. You have a stop loss for a reason, but if you see that things do not, go the way you like, and this is the levels, right? Sometimes you put a stop loss under that level, but you know that you need to stay above this level. Since you're going to break this level, you don't need to wait all the way to hit the stop loss. You know that you lost that level. That's why I like this level.
So on Bitcoin, then, you're waiting for the confirmation of the support level around the sort of 62k mark, and if you see a bullish move away from there, you'd be tempted to maybe get into a trade or something. Is that how you work it?
That's the area that I'm looking now, because it's at the bottom of the range, and the question is, will it stay inside that range or it's going to lose it, right? So that's the 63k. Okay.
Yeah.
So I want to make sure that I see support and then move. Then if I see a support, then it's okay. We're moving from the bottom of the range. We're moving towards the 50% of the range. That will be the next setup. If I lose the range, however, then I know that I'm going to target the red and the pink, because that was a hell of a resistance. I'm going to treat that as a support. So that's the two setups that I'm looking right now on Bitcoin on the 1 hour or 90 minutes. It doesn't matter. So here's the 90 minutes. The candles are more solid against the 1 hour because each candle is 90 minutes, right? So these two candles is 3 hours together. So it has more, it has more volume for me, it has more value. So I like to see, you know, all the bodies to be above this range. If I see weakness, then it's going to come down, right?
Yeah.
And the next level that, you know, I'm going to target is going to be look like huge imbalance. That is matching my red line. So I say, okay, you know, yep, that's 50. So at least I'm going to be safe here. So either you're going to lose this level because of the level, or you're going to lose these as a range. Okay. Now, can you break? Let's say you are zoomed in on the 50 minutes. Let's take this example, and you have this 15 minute, right? And you have this level, that gray level, and that red level. Can I make this a bit thicker so you can see? Can I have a thick line? Thank you. So you have this gray line here and this big red line, and they are really apart on the 5 minute or 15 minute. Look at how big they are. Okay, 3%, but it's big. What can you do to monitor this on a 5 minute? You break this level into two. Right. And here it is. You can have that on a 5 minute, 3 minute, it doesn't matter. That's where we are now. Trying to match it. Here we are. Roughly as close as possible. And guess where we are now? We broke these two levels, the big levels, into smaller levels, fractal. Right, so I've got two levels now. I mean, like I've got two Fibonacci, one inside the other. And now I can monitor that on a 5 minute. What did I say? I need to stay inside the range above the 50%. Right? If I lose that 50%, that means it's going to lose the range, and then it's going to go down level by level. 62.5, 62.3, 62, 61.8. And you go level by level. What do you have? A downtrend anyway. You see different time zone, time frame, time zones, timings, you know, different approach, different reaction. There's nothing, you know, it's not a case of someone being right and wrong. Why the other guy is going long? Why the other guy is going short? What do they see differently? Is the time zone, the timing, and the time frame there. It's the 3 T's.
Thank you for that. Appreciate it. I'm going to go back to mute now and leave you alone.
Okay, that's fine. You don't need to leave me alone, but you know, you're more than welcome to stay around with us. Thank you very much for that. I hope you answer the your questions.
Very much so. Thank you.
Good. Sorry, have I answered your questions? I know it was a long one, but for you to understand, I need to go through all the process for you to understand why I mark these levels and how I see these levels and why I react.
Yeah, thank you. It's different types. I already actually used to divide my my chart in quarters like you did, but I didn't actually do it from the monthly candle, but just really from the start to the top.
That's
to
fine.
mark different areas. I have another short question, if you don't mind.
I don't mind.
A very basic one. When you have a watch list in TradingView and you have a change percentage, change percentage, the last one and the change. What time frame it is? So when actually we choose 5 minutes, is on 5 minutes?
No.
An hour is an hour?
No. This is the last 24 hours.
Oh, I see. Okay.
So what it does, these percentages change on 0 midnight UTC.
Okay.
Right. So I'm ahead of UTC. So I'm 3 hours ahead of UTC. Right. So to me, every morning at 3 o'clock, TradingView will reset all these percentages. So total 3 is up by 0.6 since 3 o'clock my time, if that makes sense, or since midnight UTC. Okay. If I go to another watch list, let's bring a proper watch list. Let's bring focus. It's fine. So 1, 5. Okay, NOT has 5% in the positive, or TON 7% in the positive since midnight UTC. Does that make sense?
Yes. Yeah.
Cool.
Okay. Thank you.
You're more than welcome. You're more than welcome. So yeah, if you have monthly range, weekly range, it doesn't matter. Whatever you use is for you to that it makes sense, right? Now, if you master to break levels like weekly, monthly, or 6 months, you know, you can go into 6 months. Let me clear everything here for you. Let me clear these. I don't mind. So let's go to 6 months, right? And you're like, this is the current month, right? And I need data above, historical data, and data below. So the previous candle, the previous 6 month candle can do that. So here's the top, here's the bottom. Right, I'm gonna change the coordinates to the left, to the right. Here we are. And here are your levels on the 6 month. You can do that as well. And then go back to the daily, and here are the levels. And then you have a different perspective, and you're like, oh, look at that. We hit a level here, which is a 6 month level. We hit a level, and then it's rejecting. Right? Again, you have levels to play with. Look at these levels. Right? That was resistance, that was a support. Can I go further to the left? That was the previous cycle. Right? That is 2021. And look at these levels. Do they make sense? These levels with the price action. And you're like, yeah. You can go down to 12 hours, have more definition, and have a look. That was a major support, right? Deviation, went above this level, claimed this level, lost it, come back, support, hit that this level. So it's playing around with these levels, right? You can go as back as you like, and you can see that these levels are, you know, good to go. You can use them. And I even have extensions. I can even go lower. So let me bring my extensions. I have a template with extensions. Let's have a look. Here we are. Let me reverse that. And you can see that I have levels as an extension to go even further lower or further higher if I want. So you see all these levels with extensions. For me, as a Fibonacci, which is not Fibonacci sequence, it's my quarter sequence, right? And they're still playing, still in the game. Okay. Doesn't matter how, but you know how far you go back, you see that these levels, you know, price action is respecting this line, so you can use them at any time. And you can predict a little bit the future. Let's say predict a little bit the future. If I reverse that, then you can see the higher levels, right? And you say, okay, when and if, right? When Bitcoin is going to go higher, there's a high possibility that we're going to find resistance 73, 69, 78, 82, 86, 91. 91 is my 50%, the top 50%. That is going to be a huge resistance up there. Right. Kind of. It's not prediction. You follow the same sequence. What you had below, you're going to have above. The same sequence. The same distance. All equal levels. Kind of. Not predicting, but you know, for you to be prepared and ready what to expect in the future. But let's bring that back to 8. And here we are. Let's go back to normal. So that is a 6 month range. It's not bad, isn't it? Look at that. A 6 month range, and you find a new resistance. We knew that anyway. We discussed about that because we hit the previous resistance here, so everybody started taking profits. The same thing with Fetch. This is Bitcoin. right? It went all the way up here, and everybody started taking profit. All these big boys that they were pushing and attracting the retailers as well. They saw that resistance and said, "Okay, this is my top. I'm out." Right? Who's has a Jojo has a hand up? Jojo, please.
Hello, hi.
Hi.
Hello, thanks for this. It's brilliant, actually. Can I just clarify a couple of things?
Yeah, sure.
So when you put on your levels, you first of all go into the daily chart just to see, or 12 hours, just to see where the trend is, which way we're
That's correct.
going.
Yep.
And then when you go into adding your levels, you if you want to trade on the 1 hour, you go to the weekly previous level and you add your fib numbers from top to bottom. And then you can trade those levels on the hourly. Is that correct?
Yeah, you can do. Yes.
Is that correct? Yeah. So,
Yeah.
but because I was wondering, so you don't need the monthly levels to trade the 1 hour. Do you know what I mean? I'm just trying to work out what you.
Yes.
Does that make sense?
It makes sense. And how are you going to determine when to use the weekly and when to use the monthly, which is the next question, I guess, right? And which one is going to be the right one? It's going to be the weekly one or the monthly?
I'm more interested in trading the 1 hour and the lower time frame. So would you just use a weekly previous levels, or would you have the monthly and the weekly?
You can have monthly and weekly. This is what I saw Luba. If you follow Luba, you're going to see Luba. She's going to use a lot of the Fibonacci.
Yeah, I do follow Luba. Actually, this is why I'm interested, because this is slightly different to how she does it. So I'm wondering how you do things differently. That's all.
No, she's using my method.
Is she?
Yeah.
Oh.
So Luba, when we first talk about the gangster, well, I call it gangster fib now, but back then it was the gun box. Yeah, it's the gun box because I use the gun box, right? And if I go to the gun
well,
box,
that's what I mean, I've actually been following Luba, so I've been using the gun box. But you're
here's the gun box. Yeah, here's the gun box. This is the gun box that we had with Luba. Luba was following me, right?
Yeah.
So it would go 0, 25, 5, 75, and 1.
Yeah.
But then when I wanted to go to 8 levels, the gun box did not have enough options for me to enable to add other 4 levels. And I'm like,
okay.
What I'm going to do is I was like, I need to figure something else. And then I came back to Fibonacci. I said, okay, what if I'm going to use Fibonacci, but I'm going to reset all the numbers?
Oh, okay.
Then you see, I've got more fields to play with. And when I go to extra extensions, look how many fields I'm using.
Yeah. So then, but then would I just use to trade the hourly? Would I just use the top 6 or 8 you had, didn't you? Yeah.
Yeah, you can use the 4 or you can use the 8. It's up to you.
So basically, you're just using more kind of intervals than the GAN.
Yeah, exactly.
Basically.
That's correct.
So okay. So then you would just go to the weekly and do the previous weekly and add your fib levels. Yeah.
Yep. Right. Now, the next trick question: when to use weekly and when to use a monthly? Right? How are you going to do that? Well, that depends what data the weekly is going to give you. Right. So this is my current week. We're on the weekly now. So this is the current week, and I have a weekly candle that has some data below. This is the current price, and I have a little data above. Can I use this weekly or can I use this weekly? That has more data above and more data below, and the current price is here. So that weekly candle is doing better than this one.
Yeah.
Okay, it's going to give you more data, more range. Now, if I go to the monthly, it's the same approach. Go to the monthly. This is my current month. And you're like, okay, I have this high, this low. That previous month is good enough for me to use my fib or the gun box, whatever you want to call it, right? So here it is. I'm going to increase a little bit the numbers, 150, 180, and here are my levels based on the monthly. Now, for you to make the decision which one's going to be better, the monthly or the weekly, is according to the data that is available to you. Maybe Bitcoin is going to be better, let's say, on the weekly, because weekly is going to give you enough data, which is more closer. Look at the top on the monthly and the bottom on the monthly, right? What if, let me do that. visible to be only on. I keep that on weekly. Sorry, not monthly. That's a monthly one. So that's a monthly one. I keep that on the monthly, and then let's go to the weekly. And we said that I'm going to use that as a weekly. So take that out. I'm going to leave that on the weekly. So we go back and have a comparison. So here's my weekly. Let me mark my out. You stay out. You hide. So here we are. So this is a weekly range, and this is the monthly range. So let me move that out of the way a little bit. 190. Oh, no, that's too much. 185. Here we are. So you see, this is the top of the monthly and the bottom of the monthly, and this is the top of the weekly and the bottom of the weekly.
Yeah.
So you see, you've got more closer range on the weekly. So you can work more closer on a smaller time frame.
Okay.
On the monthly, it's giving you a bit wider range. So it's
Yeah.
telling you, it's giving you more levels, distance from level to level for you to play. So maybe the weekly is going to work better than you if you are trading on 1 hour rather than monthly. So it's not a fixed answer if the weekly is going to be better than the monthly. It's what range they're going to give you and
Right.
how close you want to work with. So if you're going to trade on 1 hour, you need something more closer, right? You don't need to wait all the
Yeah.
way down to 53. 57 is better, okay, on the
So-
weekly.
So can I ask you, so on the actual GAN, on the, the GAN levels,
Yep.
so on, the weekly, is that enough, in your opinion, to trade the 1 hour just using the GAN for the weekly?
Yeah, sure.
Yeah,
Sure.
okay. So,
Absolutely.
because I mean, it's just a bit confusing because I have been following Luba, but now I see you have lots of other numbers in as well. So I'm just wondering,
No,
so
it's exactly the same approach, the same conditions. Weekly, me and Luba, we used to be very close some time ago before I started the
Yeah.
project that I have on the day job. So
yeah,
Luba was around with me when we used to talk about weekly and monthly. So you're going to see Luba, she's going to have two CAN boxes at the same time. She's going to have, let's say, the monthly and
the
maybe the
weekly. That's what I've
weekly,
been doing.
and
Yeah.
you're going to have double lines. And when you have
Yeah,
double
it's
lines,
quite
it means
confusing.
it's not confusing, but when you have double lines, it means extra confluence, extra
Yeah.
strength on this level, right?
Okay.
But I need to update Luba. I need to update her to bring her more closer to me, to this
Yeah.
updated version.
Yeah.
And then you can do different things. And you can say, do I see a range? I see a range here, right? And what
Yeah.
I usually do, I break down my range. So this is the top of the range, and this is the bottom of the range. And this is
Yeah.
my levels, right? Look at that. And that is according to a range, not a weekly, not a monthly, according to a range. You can do
Yeah.
a different approach, right? That was a range, so I broke down my range. Or you can say another approach, when did I have my last impulse, a big impulse, a swing low, swing high. So I'll mark this low and I'll mark this high. I want to break this down. Again, historical data. Bam, sorry, wrong tool. That's the very bottom and that's the very top. That is my last swing trade, okay? The swing move, impulse move. So I'm going to move that to 100, goes even further, 50, here we go. And that one we're going to do 310. Is that enough? Yeah, that's enough. I can go even further to the left. Go to 0. No, let's go to minus 100. Here we are. Okay, so if you watch now on the 1 hour, look at these levels. Even in history, even if you go back, you see that historical data is going to be good enough, and you see the price action is following these lines.
Yeah.
Right. So if you see this, then it's good to go. All right, and come to the right, the more current time, and you're like, okay, and That's the range, and you lost it. And it's going down. Where to? To that red line, 618. Okay, so we made a different approach, like weekly, monthly, range, impulse, you name it, right?
Yeah.
Now people are going to be a little bit confused right now. So, okay,
Yeah.
what do I use? Do I use daily, the monthly, weekly? What
Yeah.
are these guys doing? All right, 6 months.
Yeah.
What I'm giving you here as an example, it doesn't matter which time frame you're using or which levels you're going to break down. Make sure that you have a level, because the trick is not for you to have the correct level pitch perfect with me or with Luba or with Dylan or with Sheldon. It doesn't matter. What it matters is for you to have a level to monitor. This is a level that you monitor now
Okay, yeah.
until this one. That's what it matters. For you to start from here to there. It doesn't matter if it's a 63.8 or 63.7, and that is not 61.8 but it's 61.5. You don't care. You care for you to travel from point A to point B,
Yeah.
because
Because
people
sometimes,
don't.
yeah, because there's sometimes, on the levels, like, on the, just say you have on the monthly and weekly GAN on the, on a coin, then you've got, as you say, lots of lines. Some lines kind of give you more confidence, like maybe there's, two mid levels quite close to get together or something. But sometimes, because there are so many lines, it confuses me, because I think, oh, which line am I going to? So that's what I'm saying.
I get you.
So like, that's what I'm saying. Can I just have on a 1 hour time frame? Can I just have the weekly rather than the monthly or anything else? And just go to
You can
that.
do. You can even do the previous day.
Yeah, the daily. Yeah.
Yeah, you go. I mean, let me remove that just for the fun of it, and let's go to the
It's
daily.
kind of confusing though, because the, as you say, it's not kind of definite. It's just more guidelines. But I think when you're learning, especially, I'm trying to sort of perfect things. I think I'm trying to maybe overthink things, if you know what I mean.
I understand. I understand. A lot of people trying to overthink and see, oh, I'm going to do better. I'm going to do this. I'm going to do that. It's fine. It's fine. Don't blame yourself because you're overthinking. That's not the purpose. The purpose here is for you to know, for every trader, right, that they have a starting point and a finish point, right? So if you go to the Olympics, right, and you have a sprint racer that he's been trained for the past 4 years, because the Olympics happen every 4 years, right? So he has 4 years for him to train, or her to train, to start from 0 to 100 meters, right? That's what he's trained for, from 0 to 100 meters. You cannot put that athlete to do a marathon and expect that he's going to win. No way, right? Because he's been trained to go full blast power, right, to reach 100 meters in 3 seconds, right? You can't ask for that little guy or that lady to run for, I don't know, 6 hours to hit the 44 kilometers, because this is how much the marathon is, 44 kilometers, right? You cannot expect that. So for every trader, that you need to see yourself as an athlete. You need to see that you have a starting point and a finish point. That is the key for the success. After all these years, this is the conclusion I come to. Where is the weakness for every trader? Why traders lose money? Because they don't know when to start and when to finish.
Yeah, I mean, I'm actually not even trading, because I'm just getting confused.
Okay.
I mean, I kind of understand everything I think now, but just it's just these confluence levels, and should I be following four different things before I take the trade, where I might see a trade and think, oh no, that works because of the levels, but then maybe the ASO is not there or something, and then I think, well, should I not take it? So I think it's obviously, you guys with experience, you've actually had a long time of, you've like found your way, but me and others maybe newer, much newer, it's very hard to trust yourself a lot of the time as well.
It's true. It's true. And that's why the ASO, stochastic RSI, ASO is, again, if you see Luba or anybody else using these three, it's because of my twin method. We used to call it the twins. So that's me again. I'm sorry about that.
You're confusing me.
Yeah, so yeah, it's the twin method, right? And the twins were
Yeah.
because the RSIs, and
Yeah.
ASI was extra confirmation between the RSIs, right?
Yeah.
And when you see the negative, and then it's telling you when you see the negative turning around, that's most likely the bottom of it, okay? But before you're gonna bring all this data on your screen and have all these things on your face, and you don't know what to do, what I usually do, double click, put the indicators away. They're there, always my agents, right?
Yeah.
But are trying to break down my price action as simple as possible. Now, I break down today, just now, on the daily. So let's go back to the daily. So that's the current day. And I use that daily candle, Friday the 23rd. That is Friday the 23rd, the very bottom and the very top. So I broke down these levels based on a daily candle, a daily range.
Okay.
And then I came back to 1 hour, and here I am. Can
So
you do on the daily? You can do the daily.
so you've only got the daily on for the 1 hour, which kind of works for me as well. It's simpler.
It's simple. And it's closer. And you don't have big gaps. And you say, okay, this is my
Yeah.
range. All
And
right.
there aren't tons of lines everywhere.
Exactly. And simple. And you say, okay, I lost the range, and I'm going from here to there, and then from here to there, and from here to there.
Yeah. Yeah, that works. That makes much more sense. Because otherwise there's just, if the
Too-
weekly's on there, there's just lines everywhere.
Yeah.
And it's
No,
like, which
it's all
one
right.
to go to?
You can use one. If you're day trader or scalper or intraday means a little bit better than scalper, but a bit faster than day trader. Okay, so you have the scalping, which is, I don't know, tens of trades per day. Then you have
Yeah.
intraday that you may have 2-3 trades per day, and then you have a day trader that you may have one trade for 2 days.
Yeah.
It has a duration of 1 or 2 or 3 days. That's a day trader.
Yeah.
If you do intra, which means you may have 2 or 3 trades per day, then a previous day or any daily candle, a breakdown is good enough for you. Just follow the direction. Okay, that was an uptrend, consolidation, and then we have a reversal. Right, not a continuation. You have a reversal. It broke the consolidation, and what are you going to do now? Short.
Okay.
Until when? Until it finds a support. That wasn't a support. That is on question. Maybe it's a red one. Maybe it's going to stay here. But if you're going to lose it, guess what? It's going to target that one. And then you're going to
Yeah.
ask yourself, is this going to be a support? Maybe not. Maybe that one. Maybe that one.
Yeah.
Maybe that one. You don't care until you find support. When you find a support, you say, okay, it's time for me to close that trade. It consolidates. Two things
So
can
when
happen.
it consolidates, so when it consolidates, it's basically, that's kind of the, because sometimes the candle just goes wham through the level, don't they?
Yeah,
Either way.
exactly. So what I usually, in school, I'm not trying to contradict here or confuse people, but in school we have 3 actions. We have uptrend, we have a downtrend, and we have consolidation, right?
Yeah.
Sideways action. So people, you're going to hear on Sheldon lessons that the market moves in 3 directions, upwards, downwards, or sideways. I kind of made it even more simple for me. And I said, okay, it's going up, right? That's an uptrend. Then consolidates. Now, my way of seeing this, the uptrend is not over yet. Why? Because this is static. It goes nowhere. It started from an uptrend, and sideways, it means a pause, not over. It's not over yet. It's pausing. So 2 things can happen from this point. Either it's going to go up,
Yeah.
which is a continuation, and what do you get? An uptrend, right? With a small pause. Or you're going to get a downtrend, which in this case, you get a reversal. So that was the uptrend all the way up here to there. And that's my new downtrend. Okay, this is down. So price action as a level of a price from here to there and to there is no different. It's no different. That is 67 and that is 67. It's nothing, right? It's flat. It's the same lane. So that is a part, my consolidation is a part of a previous move. It's an uptrend. It just went sideways. It means nothing, nada. So I see the market move in two directions. Either it's going to go up and continue to go up, or it's going to come down. And on the downtrend, you have the same thing. Comes down, consolidates a little bit, and then it can carry on. Or it can turn around. That is the reversal point. That's the new start, not that one. That is me, okay? In school, I know that we say these three directions. To me, it's two directions. It's either going to go up or either going to go down. Sideways, it means nothing. It means that the price did not move. It remain on the same level for X amount of time. So it's not movement. Why should I take that as a movement?
So would you come out of your trade at that point? Would you, if you're like, going
Yeah,
long,
when I see consolidation,
you'd
right?
come out.
I see a range, okay? And let's say that I went long and it comes up, and then I say, okay, you know what? It's consolidating. I'm going to move my stop loss there. I'm going to update my stop loss. If it wants to carry on, I'll be still on, and my stop loss is going to be there. If it's going to break my range and it's going to hit my stop loss, then I'm out.
Okay.
Right?
Okay. Makes sense. Yeah.
Does that make sense?
Yeah.
If it wants to carry on, you're more than welcome. You're more than welcome. As time goes by, like we're getting towards September, I'm going to be more available, so I'm going to be more around. It's this big deadline that I have to give out my a big project that I need to give out in 2 weeks. By the 10th of September, I need to hand over the project, and after that, I'm going to be more available within school and within war room as well. So,
Brilliant.
So yeah, that was a consolidation. So that was an up move. So consolidation pause. You could have a continuation.
So you'd move your stop,
I move my stop loss under my range,
and then
under my level.
Yeah.
Yeah. And if I get stopped out, it means it cannot go. It's no continuation anymore, and then I can reverse. I reverse my trade. I say, okay, close it, take all my profits, and then put my initial capital plus my profits to go short. And this is called compounding.
Okay. Listen, thank you so much. That's been really helpful, actually. I'm sure I'll ask the same questions over and over again.
You can do.
But,
You can do. It's free.
It takes a long time.
It does. It does. It does. It takes a lot of time for you to understand, and then for you to get it, and then you say, "Aha, I see you now." That's why when I start this session, I said everybody has different eye colors. It means you're going to see the market differently. Some people will see horizontals. Some people don't get the horizontals. They get the diagonals. It's fine. There's nothing wrong with diagonals. Here's your diagonals. What do you get? A break of the trend, and you got a retest, and it's going lower. So you have early signs of reversal, possible reversal. Why? Break of trend, retest, and then it wants to go lower. It's fine for you to see diagonals. Other people see ranges. In the war room, we see ranges very easily. Right? Okay. This is a range, and then we need two conditions. Either we're going to go up or either we're going to go down. Simple. Other people will see horizontals. It's fine. It's fine. Seriously, it's really fine.
I might do well school, actually. I think I should do that. Okay.
Okay.
Yeah, thank you so much. It's been brilliant.
Okay. You're more than welcome.
Thank you. Bye-bye.
Thank you. Bye. Right, okay. How long have we been here? We've been here for 2 hours and 45. Okay. Another short video from me again. Yeah. Well, compared to 8 hours and 7 hours that I've done in the past, 2 hours is a short time. Hard to take the leap of faith with so many different indicators. And yeah, exactly. Exactly, Sam. This is the problem now. Because I have my agents. Do you want me to show you my full agent? I mean, I'll open up my agency. Ladies and gentlemen, welcome to my agency. See these guys here. I've got like loads of them. I've got like 7, 8 indicators, right? But I use them on a monthly, to be honest, right? This is the indicators that I have, all of them together on a monthly basis. But I don't see them every day though, right? And this is the indicators that I see. And I follow based on my monthly time frame, right? And I did give out my warning, and like, not my warning, it's not a warning, but I was worried. I am worried about Bitcoin, okay? And that's why I say to you the 2-month time frame in the stochastic RSI. I only talk about the stochastic RSI because I want to keep things to you simple. But if I want to see the full picture, I use all of these indicators. They have a meaning to me, right? And still, I have my DMI, I have my stochastic RSI, I've got my RSI, my ASO, my wave trend, I've got TDI with these traders directional index, I've got RCL lines, I've got lots of indicators out there. But if I'm going to start talk about these indicators, I'm going to lose you. You're going to go bananas. You're like, what is this? It's like anything secret, hidden, NASA thing. No, it's nothing. Stay to simple stuff. Stochastic RSI, RSI, and ASO, it's absolutely fine. Okay. And even though before I'm going to, let's say, hit hard on them with you, I need to make sure that you understand price action. Why? Because price action is real time. This is real time. It's happening now. Price action happens first, indicators follow later. These are lagging indicators, right? Lagging indicators. This is real time, this is lagging. Why it is lagging? Is there something wrong with them? No, it is nothing wrong with them. What happens, stochastic RSI has a formula. It needs to calculate, to give you a value of 81 and 90 on a daily, it needs to calculate the past 14 days. So for me to give me a value, it needs to calculate the past 14 days, right? So it needs all data, so to say. If I go and see stochastic RSI formula, you're gonna go bananas. Let's have a look. Do I get the formula, please? Oh, here we are. Here's the formula. Right, it's stochastic RSI equals RSI minus minimum RSI plus maximum RSI minus minimum RSI. Where RSI is the current RSI, leading blah blah blah, minimum RSI is the lowest RSI, reading over the past 14 periods. So on the daily, that means the past 14 days. Divided by the maximum RSI, the highest RSI reading over the past 14 days. And then it's going to be divided by itself. So it's complicated, right? So for the stochastic RSI to give you a value, it needs to go and calculate the RSI plus the minus the minimum RSI, right? Plus maximum RSI minus, divided the maximum RSI by the minus minimum RSI, all together for you to get the stochastic RSI values, right? And then it does that twice, because the yellow line is the fast line, the gray line is the average, which again, the average, the gray line, the slow line, it's division of the fast line by 14 again. So you have two lines there. The fast line, the sharp move, and the gray line, which is slow, the smoother line, okay? So it is not a bad indicator, it just needs all data to give you some calculation. So it's going to be lagging, it's going to follow up the price action. The real time, the big guy, the big picture is the real time, the price action, that's it, PA. When you say PA, we mean price action, PA. And we do TA, technical analysis, right? Now, technical analysis is supposed to be based on PA, right? And then later, you can consult, bring the indicators, bring your agents and say, okay, what stochastic RSI is telling me, what RSI is telling me, what ASO is telling me. And I got a cross down on stochastic RSI on the daily. What does it mean? We're heading down. The momentum, the arm momentum, it got weaker. It's running out of steam and we're heading down. That's what the stochastic RSI is telling me. What about the RSI? RSI is heading downwards. That was pushing up and now it's heading downwards. For how long? I don't know. The further it goes down, stochastic RSI, the further it goes down, the price actions go further down. Okay? And what about the ASO? The ASO, it's an indicator that is going to help you to understand who is in hand. And what do I watch? A lot of people, when you go on Google and trying to understand what ASO is, a lot of people are going to start talking about the crossings. I go one step further, as always, and I don't look for the crossings, because if you follow the crossings, it's a little bit too late. I'm watching for the curves. Let me make it bigger. I'm watching for the curvings. I'm watching when, this yellow is my positive, right? And I want to see when it's going to turn around and lose that peak. When you get that, it means it's going to go lower. This is the positive that losing steam and it's turning around. And you see the negative on the ASO, the negative and the positive. Let me do this for you. It's a mirror image. Whatever you have on the positive, you have exactly on the negative. What you have on the negative, you have exactly on the positive. So it's a mirror image. Do not pay attention on the same time what the positive and the negative is going to do. It's nothing. It's exactly the same opposite, right? So pay attention whatever is above. Who is in control? Negative, price action is going down. Who is in control here? Positive, price action is going up. Losing it, that means price action cannot go any further up. The negative is losing it. It means the price action cannot go any further lower, right? Is losing it. Now we got the positive losing it. It means it cannot go any further high for this time being on these price action, on these Bitcoin on the daily. So go back, what do you see? Dropping down. Okay. But that will come later. Learn first the price action, the PA. Learn how to break them down to any kind of level. It doesn't matter which level it is. It's a range. It's an impulse. It's a daily, a monthly. It doesn't matter. It's 6 months. It doesn't matter. Break them down to levels and go level by level according to your time frame, your style. If your style is day trading, then you can use smaller time frames. Break them down to smaller levels. You're going to be fine. Right, guys, that's it for me for today. It's been a long live. It's been almost 3 hours. I don't want to overdo it for you. We're going to do another one next week at the same time. We're going to talk again about the same thing, roughly. Before I go, do you have any questions? Would you like to say something? You may say, you want to say hi, you want to say goodbye, you want to say, I'm doing worse now, I'm doing better, I understand, I don't understand. I'll take any comments. Come and say hi. No? You're too shy? Right, okay, guys. Right, okay. When it's going to be uploaded? But tonight it's going to be up. Right, I usually do 3 hours sessions. Zoom will have it ready for me in a couple of hours, and then after that I'm going to upload it on YouTube, and then I'm going to post the links inside the school. Right, so until next week, where can I find the recording? I have a section in the web room. If you are not in the web room, I'll post them on the school. On the general chat, on the traders chat or the newbies chat. I'll post them in both areas. You're going to see something like this. Let me bring Discord up. Where's Discord? Come on, Discord. Let's have a look. Let's go back to the school. And if you go to newbies or traders chart and scroll up a little bit, I know you guys are really, really busy and charting here and charting, which is good. But yeah, if you go up, you're gonna see my levels. My videos. Or you can search by my name and go to Freedom. And then you can see all the posts that I made on the right. And you can see that I have the live, and then I posted that one here. So here it is. I jump, and you see something like this. Live session is uploaded under the playlist. Here's a playlist, and here's the videos, right? And this is what I do. Here's another one over here. So here's another post here, YouTube, playlist, and stuff like that. So I'll give you the links. Okay. Right. And again, Bitcoin is losing the 50%. You see that? It's losing it. It's going down. We knew that since it lost the range, it's going down. We lost that level, and now it looks like it's going to lose that level as well. So down it goes. Simple as that. Trying to keep your trading as simple as possible with less noise, with more music, and you're gonna, be successful. Try to stay unbiased. Doesn't matter what I say or what Sheldon says. You mark your levels, you draw your lines, and you just go from A to B. And the more you do that, the more successful you are, because how the market is taking the money out from you. I'll tell you why. Because you don't know when to stop. You entered here and you anticipate that you're going to get out here. Market comes down, you get very happy, and before it hits your line, it turns around and you got stopped out and you never hit your target. That's why. So you need to have your exits and go level by level. It's better for you to get 5% rather than target the 50% and you never get it. Grab that 5%, it's fine. The next day you're going to do another 5%. The next day you're going to do another 10%. And you're going to do fine. Okay? You're going to do fine. Right, okay. Ladies and gentlemen, thank you very, very much. Enjoy the rest of the week. I'll see you, of course, next week. Be safe, trade safe, have your levels, and you're going to do just fine. I promise you. See you around.